All right, this meeting is called to order. Welcome, everyone, the masses out there for the second to last meeting for the budget hearing. So this is our public executive session. Yes, exactly. Let's have a hand for that. This is the public executive session. We are going to go into private executive session in the very beginning, but we'll get to that in a moment. We'll do the Pledge of Allegiance. Mr. Hill, would you mind leading us?
I pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All righty then. All right, let the record reflect that we have a quorum, so we'll get going. Been a busy day around town today. A lot of stuff going on. So what we're going to do for our purposes is I will entertain at this time a motion to go into private executive session for the purpose of speaking with the town attorney and the human resources director about some leftover litigation items and possibly updates on union contracts. So is anyone willing to make a motion? Mr. DeWitt, seconded by Mrs. LeClaire. All in favor? All opposed? Abstentions? That carries unanimously. So at this time, we will adjourn here and go into private executive session in the conference room in the back. Thank you. No papers, guys. Right. You know the drill.
All right. Can I have a motion to come out of private executive session? Mr. DeWitt, do I have a second? All in favor? Opposed? Abstentions?
Aye.
We are now back in public session. Mr. First Selectman, are the Board of Selectmen convened as well?
Yes, they are. We are. Thank you.
Great. So I've been out of town all day on business. Is there any news? It's a slow news day.
It's not going to snow tomorrow.
I think at this point in time, it's perfectly appropriate for this board, as well as his colleagues on the Board of Selectmen, to congratulate Mr. Flato on his new appointment by the governor. We wish him the best of luck in his new position. And most importantly, we thank him for his years of service to the town. Ken and I are of different political persuasions, but we've always gotten along very well. And even though we've disagreed at some times, and Ken has disagreed with this board at some times, we've never been disagreeable. And it's always been a pleasure to be in his company, and it's always been a pleasure to work with him. The one thing that I've always admired about him is his dedication to the position, the long hours that he's kept, the untold number of emails and phone calls that he and I have had on weekends and weekend nights, and the man worked hard for the people of Fairfield, and they owe him a debt of gratitude. In addition, though, I think a better debt of gratitude, or a bigger debt of gratitude, is owed to his wife and his family. These positions are not easy, and the fact that his wife had a full-time job and had all the kids at home and had to put up with him working a full day and then coming out and being with the likes of us several times a month is a great tribute to her. So I think the town of Fairfield owes your wife and your children a thank you, maybe even more than you, for all that they did and endured for the town. So we wish you nothing but the best. Come back and see us. As you walk out the door, you do know we will blame you for things. For many years to come. And an important public service announcement, Sherry and Jim are now accepting applications. So congratulations once again from all of us.
Thank you all for the kind words, and as well for my family. It is good, though, I have to tell you, when you're out late at night at meetings, to have witnesses. So thank you, thank you all for attesting to my presence at these meetings. But really, it's been a joy and a pleasure and an absolute honor to serve this town. You know, as I said this morning to the press, it was awfully tough decision, but it's a great privilege to have a chance to help the state, but I just have enjoyed this job immensely and hopefully done some good things and enjoyed working with these boards. As you know, I love this work, and I love working with you very much, and I've really enjoyed it. And I'll be a private citizen, but I won't totally disappear, I promise.
Is there any board member or one of Mr. Flato's colleagues who would like to say something? Mr. Walsh.
They did a lot of talking this morning.
I'd just like to thank Mr. Flato as well. It has been a pleasure to work with him on the Board of Selectmen. I had the pleasure of working with him through the RTM on many budget seasons. I'm not, is this your 14th or 16th budget season?
16th.
16th budget season. That's a lot of budget seasons. And to go through these meetings for 16 years, this is really my first of going through the full budget season here as a member of this table, but to actually have to go through it for 16 years is quite an accomplishment, and the town owes you a debt of gratitude. And we've worked great as a board, I have to admit, and I would like to thank both Ken and Sherry for welcoming me onto the Board of Selectmen. And but Ken, you've been great, and we wish you the most success as you go forward in your new venture.
Anybody else? Please, Sharon.
I'm not used to this.
I'll make it.
Come on, somebody criticize something.
No, I do that enough. I don't need to do that today. But Ken and I have actually known each other since before he was first selectman. In fact, I was the town chair when he was running, when he ran the first time. And so we've gone through a lot for more than 16 years now, and there've been some trying times, but you've always been good, you've always been reasonable, and you've always tried to see the other side, so I do appreciate that, and you have put in an extraordinary amount of time and hours, and your family has tolerated that, and that you're right, Mr. Chairman, they do deserve a lot. Whoops, sorry, I didn't know that button did something. So they do deserve a lot of credit and thanks, and Ken, thank you so much for all you've done for the town.
Sure. I do have to say one last thing, though, in all seriousness, for those that may be looking into this. My barber did tell me after the first year, you're going to get a little gray with this job. And I was like, nah, it's not too much, so don't worry. It's not that bad.
Anyone
Jim doesn't have
else?
to worry.
Yes.
Thank you very much.
Go ahead,
Thank you.
Mr. Tetra.
And just to add in two more cents, I think that there's no question that the amount of hours, the amount of effort, I don't think there's anybody in this town that's worked harder for Ken over the last 14 years than what he's put into this. And we should notify his wife, Liz, that this is on Fair TV, and she can hear all these good comments about her and the family here, too. So we're storing that. And thank you, Mr. Chair, for taking time to recognize the first selectman in that way.
All right. Seeing none, another jam-packed evening tonight. We came out of private executive session, and tonight we have the finance departments. I want to thank the department heads for coming back for this. It was postponed from last week. We'll be hearing from the finance department, the purchasing area, the town clerk, the assessor, the tax collector, information technology, and we'll take a look at unemployment compensation. After that, our board goes into public executive session, no public comment, but it's where we will discuss the budget as a whole and our impressions after having heard all of the departments throughout the last month, and what our thoughts are as we send this off to the Board of Selectmen for their votes, and then it comes back to us for our votes next week. Any questions from anybody? All right, seeing none, we'll go to the Finance Department first. May I have a page number, please? Thank you. 134 is the page. $133, $134. The budget is now before us. The expense is up about $18,000 over the prior year, and $20,000 of that is health insurance. Mr. Hiller, anything to discuss or that you want to point out on this budget to us?
I don't think there's anything extraordinary. I think when we get into executive session, as you are aware, we've hired the new employee within the department. Salary is reflected here. I would also say that the Secretary B position, which was shared with the Town Plan and Zoning Commission, is no longer in that, and has gone back. That position is now in the Building Department. And when we get into further discussions between the Building Department and Town Plan and Zoning Department, we can make those adjustments, but that roughly $20,500 salary can be removed.
I'm sorry? It what?
It can be removed.
So where is that in here? It is under Secretary?
If you look over on the personnel on
Yep.
page 135, third from the bottom,
So we can take out the 20,498?
yes.
Paul, that's removed but relocated, right?
Well,
Yeah, it's out of my, well,
the other
there's also,
department had a position, though, so Linda's actually going to give us a
Right, I
little
have an
now.
adjustment list, and perhaps the Board of Selectmen
So
may
it
make
is
an
Yeah.
adjustment before you, but we'll
Fair
take
enough.
care of it. Got it.
Okay.
Department had a position.
Any other questions, comments from anyone? Mr. Tetra?
Mr. Chair, is because that's in essence, a head moving, is there any change to the healthcare line, the insurance line? Isn't
have
that
to ask
allocated
Mrs.
per head
Gardner on
in a
that.
department?
That can move over to building as well. We'll take care of it in the package of adjustments.
Okay, what we're being told is the salary is already in the building department? Is that what the first selectman
Well,
said?
Because the-
Well, the building department had budgeted a full secretary, and
Mm-hmm.
instead, they took 4/10 of a secretary, so they will also be reduced 6/10 of a secretary.
Okay, so we have two reduced
Yes,
expenses.
yes, which I've.
Is you're saying, but the health insurance wasn't included in the building department, so
No, it
that
was
piece has
included
to
in
move
the
up.
building department, and 4/10 of it was included in the finance department, so you'll be removing those.
But in reality, there's one less employee, so there'd be one less on the health plan at the end of this.
Right?
So it's,
Actually,
no?
I wasn't, never mind. I was going to leave it in
Might
health.
suggest we
Oh, you're going to leave it there anyway? Just,
I might suggest we leave it there anyway.
That was going to be my suggestion, but I
Yeah.
have the list of adjustments. You
Yeah,
can-
given the other challenges in the fund, we
Right.
probably want to leave it in. Yeah. Mr. Walsh?
So there's a position already in building, and we're going to be reducing that position by this point
We're
four? Is it going
reducing
to be a point,
the-
is it going to be a
actually
point
what-
four position?
Right, we're going to reduce building by 6/10, and we're going to reduce finance by 4/10 for a total of a reduction of one position.
and Town Plan and Zoning will stay the same. The person will still be 6/10 in Town Plan and Zoning.
and building, in effect, will have 1.5 assistants instead of 2 full assistants at the end of this.
1.4, I guess, right? Okay.
Okay. Mr. Walsh, you all set?
Thank you.
Okay, everybody? Good. Okay. Seeing no more, we'll go to the purchasing department. Page 136, 137. Ms. Holland is here, I think. Hello. I might remind us, we also have the administration department with administrative services. Mr. Bolito, if you could give me a page number on that, if you don't mind.
Purchasing is 137.
And what's administrative services, if we can find that?
asked me that.
Yeah, there we go. I just need a little help.
40 and 41.
Thank you. So insurance is up $6,100 in budgeting, in purchasing, rather, and you're up $9,300 in total expenses. Do you want to talk about this just a little bit?
What, for the insurance?
No, not for the insurance, for your other expenses. Why are
Or
they
for
going
the
up?
other expenses? I included more money for education and memberships. As you know, our budget was cut by the RTM last year. I'd like to see some of that money restored. That's probably the single biggest increase, slightly higher for advertising as well.
And what is that?
And
for-
travel and meetings works in conjunction with education and membership.
Where are you trying to join, if you don't mind, or what would that allow you to do?
It mainly provides for transportation and attendance at the annual conference for the Institute of Supply Management. The conference in 2012 will be held in Washington, D.C. And while it is so close, I would like to take advantage of the proximity, save on the travel expenses, and send a couple of staff members to that.
And this is for how many people to attend?
I think I budgeted for all three of us.
Okay.
And I would, just as an aside, as you know, two of the employees are fairly new over the last couple of years, and this would be kind of a one-shot, extra training session for them. I thought it was worthwhile to do that as a one-time thing.
The conferences extend over a period of, I think they're 5 days. This would be a one-day event, slingshot trip down and back.
Okay. Any other questions, comments on this budget? Seeing none, let's quickly go to page 40 and 41, Administrative Services. Two items here, fees and professional services and special departmental supplies.
Yes. Fees and professional services is a modest increase for the courier function that we contract out. It's someone who goes to and from the post office to retrieve mail, and that same person delivers mail to the town buildings, the various town buildings, senior center, recreation, police, library, and so forth. The special department supplies, I believe, are some of the fees that we've incurred that are quite honestly simplest and easiest to allocate to one budget line. And they're miscellaneous fees for our mail processing service. We're right now saving approximately 6 cents for every piece of mail that we send out, because we send it to a company that does the pre-sorting, barcoding, and address verification. And in return, we pay them a fee of a couple cents per piece, and in return, we get a greatly reduced rate on the postage. Some of these costs that we get on a weekly basis are 76 cents, $15. They're minuscule costs that it doesn't make sense for accounting purposes to apportion out to 20 different departments. And so I'm advocating that we just put it under one line item in the administrative services budget so that we can just group everything together and keep the accounting as simple as possible.
Where do we see the savings in the other departments?
I haven't scrutinized their budgets. I don't know.
But we should see them in the postal lines?
You should. However, there is a postal increase expected, most likely in May.
I think it's more an offset, because I think Twig gave them the number to use for estimating
We did. I
postage.
gave them an amount per piece.
If you look back 3 or 4 years, just a quick comment, Twig's done a wonderful job on, this is almost semi-privatized. It was much more expensive back 4 or 5 years ago between the person that was working there and paying full freight on all the postage. So I know it would have been higher. I'm not sure how much the net has been, but it's...
Okay. Mr. Walsh and Mr. Brockville and Mr. DeWitt.
We combined us.
I know. I was looking at you, and I had his hand. Go ahead, Mr. Walsh.
Twig, the line of rental and storage, that's $20,500. Is that for the rental of the copy machines?
It is,
For the whole, to all town hall?
for all the common copiers
Okay,
that are in Town Hall and Old Town Hall.
at Old Town Hall. Okay, thank you.
Mr. Brockville?
Thanks. Hey, Twig. Can I just go back to fees and professional services for a second? That's the line, you're saying that's for the courier who, so that's a part-time position, hourly position? What is that? One
We are,
person, or-
I'm sorry. We are billed on a monthly basis. It is, you know what, I shouldn't quote the price because I don't remember off the top of my head. But essentially, that courier does a number of things in addition to routing the mail and so forth. Any large copy jobs are given to him, so it saves on administrative staff time. We're not tying up an admin person to run 2,000 copies.
I understand that. I'm just curious,
So
is this,
forth.
but is this a person? Like, is there a person, Joe, who does this work? Or is this like a service or a company we're contracting out to?
It's a contracted service.
Okay.
I got permission from the Board of Finance maybe 7, 8 years ago or longer to contract this service when a full-time town employee gave notice and resigned her position. And given that It was difficult for the purchasing department to deliver mail and do those sorts of functions. Whenever the full-time employee was sick or on vacation or so forth, it seemed to be the best way to go. And it's been quite successful and less expensive.
Well, I've worked with you directly in some purchasing issues. If you say it's a better way to do it for the
Yeah,
town,
it's a better way to
probably-
do it.
It
I
probably
was
is.
delivering mail, and
Yeah.
I'm willing to do anything, but I'm a pretty expensive courier.
Yeah, and then the last, I'm sorry, Mr. Chairman, just curious, the postage line went from 10,800 in 2010 down to 1,500 and then budgeted there. I'm just curious, is that because of these savings or a different way you're apportioning postage?
It's a different way of accounting.
Okay, no
for-
problem.
Charges back to departments.
Yeah,
basically.
I
Charging
figured
back
that was the case, but,
departments,
yeah. Okay, thank you.
Mr. DeWitt?
I'm focused on this focus. All the postage from the town goes through this service? You said that saves us 6 cents a,
Yes. Yeah.
so why wouldn't every postage line in here be rolled up to your one account?
I did, as Ken reminded me, send out an email message to all department heads, giving them the per-piece cost, as best we can predict it, noted the likely or the possible rate increase from USPS. I don't manage their volume, so I don't know if they're planning to increase postage or the number of pieces that are sent out. Pardon me, so I really can't answer that.
But, Chris, if I could help, I mean, I think it's kind of just I guess, a policy issue that they've had traditionally to have the departments keep track so that, if we see a department's postage all of a sudden triple last year, we can track it. If it's all accumulated, it's a much harder thing to do that. I mean, you get reports, but this way the managers see their own volume and their own cost. But
I just
you
always
could do it either
assumed
way.
that postage line meant somebody went out and bought stamps. I mean, maybe that's, obviously
Yeah.
that was a bad assumption. So nobody's buying stamps with the postage line. That's just an allocation ultimately back, that would go back to you for this service.
In this budget, yes, that's correct.
Okay, great. Thank you.
Any other questions, comments, concerns? All right, seeing none, we'll go, thank you very
You're
much.
welcome.
Ms. Hunt. We'll go to page 140, the Assessor's Office, 3050. Oh, did I skip the Town Clerk? My apologies. Betsy, I skipped you. All right, I don't think she wanted to come up, actually. So it's Department 1030. The department is 1030, and it's page 37. I'm sorry. How you doing?
Good, how are you?
Good, thank you for coming back tonight.
You're
Our
welcome.
Apologies for the confusion. All right, the budget increase to this department is about 1.72%, $10,000 year over year, and $12,000 of that is health insurance. Questions, comments, concerns on this budget? Go ahead, Mr. Walsh.
It's more on the revenue side, if you don't mind talking about the revenue side for a second.
Okay, Mr. Walsh, do you have a,
Yeah, I'm trying to find the exact conveyance taxes.
okay, I think the number's at 1.2 million, and it was at 1.1 million this year. So,
It's line, on page 16, it's line object 42312. The $1.2 million that's estimated, is that the number, were you requested to supply a number?
Yes, which I supplied 1.1 million, and that's based on the fact that we just had a revaluation where the values came down. So, and our volume has been down as far as sales. We're not getting the prices that we were.
Compared to, where are you compared to budget on the conveyance tax line, do you know?
As of today, as the close of business yesterday, 868,753. As of the end of the month, March fiscal 2010, we were at 858,238.
So it's not that much of a difference between the 2 years?
No, not right now.
Okay, so the number you supplied was 1.1 million?
Yes.
In regards to number of transactions, you track that as well? Mm-hmm. Where do we stand?
At the end of March
Yep.
fiscal 2010, we were at 550. Right now, as of close of business yesterday, 535.
All right. On the next line, on certified copies,
Wait, Mr. Walsh, can I jump in?
Yes, you can.
So on the conveyance, just to be clear, for the actual for 2010, so for, as of June of last year, so you were at like 850 at this time last year, and then through June of last year, you booked about another 450,000 or so you ended the year at about 1.3 million.
Right. We had a huge June last year.
Right. So you had a large June, but you made up 450 to come in at 1.3. And then the budget for next year before us right now is off that by about $100,000. It's at 1.2 million.
Right.
Right. Okay. Yeah, Mr. Tetra, I know.
Mr. Walsh, if I can just clarify a couple points?
sure?
Hi, thanks. One of the things the state legislature did is eliminate short sales and foreclosures from having to pay conveyance tax.
Correct.
So I look at your numbers, we're kind of running with last year, it looks like there's no difference. Do you know what percentage of the transactions are short sales and
Last year,
foreclosures?
we had, calendar year 2010, we had 9 committee deeds, which are foreclosures by sale. 5 of them were exempt from conveyance tax. As of
Okay.
January 1st, that has been pulled by the state legislature of this year.
Okay, how many short sales are included in it?
So we don't get them until after the fact.
Right.
You know, as far as,
As of March 31st, you should, between October 1st and March 31st, you had X number of transactions. What percentage were short sales?
we don't track the percentage. I don't have a reason to, as far as conveyance tax. You know, if it comes in, it doesn't say whether it's a foreclosure or not, as far as on the deed itself. We've got 41 where it was just recordings, where they're a mortgage foreclosure, we only get the recording fee, where we'll get the notice.
Okay, on a short sale, though, I guess that's what I'm trying to determine, that there seem to be more short sales and foreclosures in general.
Right.
So my question is, do you know how many transactions came through that conveyance tax was not paid since October 1st because of the change in?
No. I'd have to I'd go back through and I could look them all up,
Okay.
but we just don't track that.
Is it ballpark a big number? You see much of that, not much of that?
I don't think so.
Okay, so from what I'm
Because
trying
if-
to reconcile is we're running roughly in line with last year. Good news is there were a number of sales incentives from a real estate standpoint last year, the tax credits,
Right.
that type of thing. So lower interest rates. So it's great news that we're running even with that. It's even better news that somehow the short sales and foreclosures haven't taken a big bite out of the numbers. So as we're looking at next year, and that's what I'm trying to get with this, how much of those do we have to reconcile with where we're going next year? So
I could, run a report, and just go through all the deeds.
if that takes any amount of effort, given where the dollars are, it probably doesn't make sense to do it. If that's easy to do and doesn't take any effort, that might be interesting to know. Have you heard from the state if there's any thoughts of extending that exemption for short sales?
No, I
and
haven't heard
foreclosure?
anything. The big thing right now is the conveyance tax, the raise to the same percentage that the state gets, which is 5%, as opposed to 2.5%. But I haven't heard anything from our legislative committee as of the last couple of weeks.
Okay, thank you. Thank you, Mr. Chair. Thank you, Mr. Walsh.
I have another question in another area, but
Absolutely. Can I just ask any member of the board have anything else on conveyance tax? Seeing none, Mr. Walsh, please. Oh, no, I don't. Not at all.
Well, actually,
It doesn't matter if I do. I need to recognize you.
it does. Actually, I was asking, I have a question, but it may be more suitable to the open discussion we're going to have later.
Fair enough.
Regarding the conveyance. That's why I was going to ask you if it's off into the field, but related to conveyance, should I hold it till later?
You should probably hold it till later unless you need this. Mr. Walsh?
Betsy, on the next line for revenues, you have certified copies. And what was your estimate on going into this budget season? Did you supply an estimate?
Yes.
What was your estimate?
right underneath
I
conveyance.
think it was 80-something.
Okay.
84?
Yeah,
Is it
Paul gave the
84?
stuff out.
Okay. I guess the question I have is, this budget line's going up 25%. Supposedly the economy's getting better. Usually in most certified copies, correct me if I'm wrong, but most of them are for attorneys in lawsuits who are using those for like foreclosure cases.
Yeah, mortgages that are being foreclosed.
Mortgages are being foreclosed. Are you anticipating that number, obviously, I guess if you're going to 84, you're anticipating that's going to be increasing? To me, it seems like we're, and I know you only put 1.1 million, and the first selectman's changed that to 1.2. If we're thinking that the real estate market's getting better, you can't have it both ways. You can't think that the real estate market's going to get better, our conveyance taxes are going to be going up to 1.2, thinking it's going to get better, but yes, also think that foreclosure work is going to also be dramatically increasing by 25% for that number to be going up.
This number also includes certified copies of our vital records. That includes births, deaths, and marriages. It's just not limited to land records. Just so we're
Okay.
aware of that.
Do you know where you stand to date on, from last year on that number?
We're at 77,000 right now.
Okay, so it was based on the number being where it is that you thought it might be going up for next year?
Right.
All right, thank you.
Sure.
Any other questions, comments on revenue items? Seeing none, let's go back to the department itself. That's, the printing and binding, I just want to ask, because it's the only number of note that's going up. It's going up by $3,000. Can you just talk a little bit about what's going on there?
After the election this past November, a lot of different bills are going through the State House regarding absentee ballots, no excuse absentees, early voting. We don't know what's going to come out of that, what's going to be passed or not. If I have to have more ballots printed, I put in the increase there for 4,000. Or 3,000, sorry.
So these are for state initiatives related to
Those are for absentee ballots.
absentee ballots, and that based on what happened in the past election?
Correct.
And you really don't know where that's going to end up,
No.
right?
I won't know until June.
Your questions, comments? Mr. DeWitt?
Thank you, Mr. Chairman. Mrs. Brown, where does your budget stop for printing and the registrar of voters start?
I print absentee ballots.
Because I know, because the registrar of voters line item is up 53% as well. What does, if I may, to Mr. Otari, what does the registrar of voters print? Everything other than absentee votes?
Regarding to the ballots, we print all the ballots that are going to go through that scanner, the machine.
Okay.
Could either be primary ballots, which are different colors, but they cost basically the same. For this election, it'll be the municipal ballot, which hopefully the number won't be a two-sided ballot, just be a long ballot. Different prices for different things. It's all sort of variable.
There's no overlap between these two printing budget line items? In fact, they're both going
no.
up, is this coincidental?
The ballots may end up looking the same, probably they will be. She
Just a
usually
different color.
designs it, and we just go with what she does.
Gotcha. Okay, thank you.
Thank you. Any other questions?
Just have a question. What is the cost for your absentee for one election, the ballots that you print?
Just
And
printing?
Don't sit down yet. Yeah, just,
$4,000.
how many?
About 2,000 to 4,000, depending upon how many ballots we
We
need.
had to have an election townwide. Just curious what extra additional costs you would have, since it's just a good question to ask now. If we, yeah. That's why I said, don't sit down.
Thank you for coming, Mr. Otari. You won't make that mistake again.
Just stay at home. Normally for municipal election, it's 34 cents. That's what it was 2 years ago. It's 34 cents per a ballot. So if you print, if it goes 100%, it would be roughly about, what do we got, 36,500. So you can do the math and figure out what that would be.
But that's just the ballots, right? Then there's the people. Then there's the people who are
Oh,
handing
you
out
mean
the
for a
ballots.
regular election? You're talking about
Rough number.
23,000.
Okay, thank you.
Yep.
All right.
May I just note, printing, binding, and photography, this whole line also includes the printing of all the books in the vault.
Thank you. Any other questions?
I'd just like to compliment the town clerk. Making the town code available online, I think, has been a great thing, not only me as an attorney, but for others in town who are trying to search our code. And to make it available online, I think, was a great addition, to be
Thank
able to
you.
make it searchable. And also, I think it's going to be a great initiative to take the land records on the computer back to 1977, I think it's 1984 right now, right?
That's actually April 1st of 1977 is on there now.
It's already on there now? Okay, great.
All right. Questions, comments? Seeing none. Thank
Mr.
you so
Chairman,
much.
if I could
Yeah.
just say, I'll make the same speech I did in regards to the first selectman's budget, and I do have the survey, which has been updated as of today, within the region and similar towns on salaries for both the first selectman and the town clerk.
We'll take that up after the department.
Fine.
Thank you.
Thank you, Betsy.
Thank you, Betsy. All right, it's time for the assessor's budget. Mr. Brown, I'm so sorry to make you get up. She didn't.
You told me she did.
She just pushed hard.
Since your budget's down by 24%, could you just duplicate this across? That would be page number 140 and 141. Thanks for coming. I'm sorry about your foot. Now, we know that the fees and professional services are coming down because we're just coming off of 2 years' funding of the revaluation process, correct?
That's correct. What I'd like to do, however, since the other night, when I saw this is before I knew what kind of appeals were coming through, and over the last couple of weeks, we've seen an enormous amount of appeals that I didn't anticipate, mostly in the commercial end and some of the high-end residential properties. And that $16,000 was set for personal property audits in the amount of $10,000, and then anticipated court costs for $6,000. I'd like to increase that by another $10,000 because if we have to go outside, or if my successor has to go outside and get some outside appraisals, it's going to cost some a little more money than what's left there. So I'd like to increase that by $10,000.
You weren't just dropping another bombshell on today, were you?
No, he's not. Don't
No,
worry.
I'm not, no bombshells this
Don't
time.
worry.
There's a
Don't
lot of
worry.
speculation, but this is the year, and I'm happy to present my final budget to this board at this time. I just haven't picked a month yet.
We
Congratulations.
haven't all worked on him yet either. so.
Congratulations.
All right.
Any other questions, comments, or concerns for Mr. Brown? Yes, Mrs. Gardner.
I do want to point out that Mr. Brown is asking for a half of a new position to make his half clerk whole. As this is the same story in the tax collector's office that you'll be hearing immediately.
Yeah, this was put in for fiscal 9 and 10, and I think Stan will dovetail it when he gets up here. It just hasn't worked effectively. When I have the half person in the morning or afternoon, and then Stan has the person in the morning or half in the afternoon, it doesn't account for if you have illnesses or people on vacation to really, I mean, Stan's going to point out probably that his collections are down because of this. He's had some illnesses in his office this year. In my case, I have to take one of the professional staff to do elderly applications, et cetera, when that individual should be out picking up some new real estate, et cetera, to put onto the grand list. So effectively, I understood that, during the crisis that we had, et cetera, but it just hasn't worked, and I think long-term it's not going to work effectively.
Are you saying that has it impacted cash flow and collections because of the split position?
I think Stan could address that on the cash flow, when he gets up here.
So this is taking 2 part-time positions and making it 2 full-time positions?
No, they're not, there was one full-time position They were split between the assessor's office and the tax collector's office. This is taking that position, adding and putting half back
But it would be
on either
restoring, it would
department,
be
and
restoring,
adding
it
one person.
would be restoring a position that was cut 2 years ago in an effort to try to save money.
Are the benefits included in this?
Yes.
Okay. Any questions, comments from board members on this item? I'm sure we'll have some when Mr. Gorzalani gets up. Mr. Walsh?
Just one quick question is, Tom, is that the reason why the health insurance number goes up by like almost 19% versus
I
the
believe
rest of
so.
the departments going up by a lot less? Okay.
Right, right.
All right. Seeing none, I think we're done. Mr. Brown, I want to thank you, and if indeed this is your last budget, I hope you'll come back before you make it official so we can say thank you and wish you well.
Okay, thank you all.
Thank you.
Thanks, Tom.
All right. Let's go to the tax collector, which is the next page. Department 3050. It's 142, 143. They're fighting over their person.
Not the first time, not the first time.
Are you the one who broke his foot?
No.
Okay.
Good evening.
Good evening. Thank you for coming. So your department's gone up by $36,000, or a little over 5%. $24,000 of that is the health insurance, and $13,000 is regular payroll, which is, I'm assuming, is the...
That other half of person, yes.
Yeah. Can you walk us through a little bit of how not having that half a person has impacted your operations or your department?
I kind of view it as a kind of a waterfall effect. Tom uses, as we've been working it in the past, Tom has this person in the morning and we have her in the afternoon. What happens is if we just have one clerk in the office in the mornings, and I have 2 cashiers, then I have a delinquent collector, a deputy, and myself. So we have 6 incoming phone lines, and we have people coming into the office. If that one clerk takes a phone call or goes to the counter, somebody else has to respond. I have the cashiers obviously processing payments as quickly as they can, and they are usually generally always busy processing payments. That means that the delinquent collector would have to get up next and go to the counter or answer the phone, and if a second person comes in, the deputy tax collector has to get up, or I get up. So it's really a misuse of what we are trying to do, and that is to be most effective and collect the most we can. For 16 years, we had 7 people in the tax office, and it worked very well, to the extent that we were able to average a 99% average collection rate for about 6 years. The last 2 years, we've been at 98.8 and 98.9. Even last year, we barely reached the goal that was set for our office last year, even though we did the lien sale. The RTM stepped in and changed the criteria that we wanted to use and raised the threshold from $10,000 to $20,000. And literally, we barely made that goal last year because of that change in criteria. Our office has been just that much busier, and as I said, 16 years ago, we had 7 people, and that was right after I started, when we lost a person then. We've done a more effective job, I think, at collecting, and even though taxes have almost tripled in that period of time, we're still maintaining one of the highest collection rates for our size town. But I can see where not having, literally what we have is a whole person missing for half a day, not just missing a half a person. And it does affect the operation of the office, to the extent that I think it is affecting our collections.
Mr. Flato, this was noted, and then I'll go to Mr. Walsh, I believe. This was noted in the operational audit as an item of
I was going
concern.
to actually make that comment. I did support this restoration. It's one of the few that it seems to me is necessary. And the audit did show that those offices are very lean. I also kind of did looked at some of the area budget books for mid-sized communities, and we do have one of the leanest staffs in the tax offices and assessment in the state to the 40 to 60,000 communities. So it seems to be a necessity.
I'm not sure if the operational audit has been corrected, but their conclusion for the tax office was that it was appropriately staffed for our size, but they miscounted the number of people. So they actually added a person that we don't have.
Something in there, right. I remember.
So
Yeah.
I've
They said the
sent
assessment
them
office-
a correction, so I don't know if that's been altered, but
It was one of the offices
Yeah,
that
and they said the
was-
assessment office was a bit short on the professional side, but because, as Tom said, some of his professional staff is having to take more phone calls and stuff, so it is, we tried it, I asked him to try it, it's what you have to do to show the community. I know it's hard spending money, but, these things have to be done, otherwise it affects the revenues.
Mr. Walsh, did you have a?
Yes, Dan, just a quick question. The change in the WPCA billing, I think there's a threshold. You only have to send one bill out if it's $300.
Yes.
I'm going off the top of my head, $300 or less. Has that helped your office at all? I'm just trying to...
To an extent, because there's certainly less, we've collected about 3/4 of the outstanding amount as of today, going into April, whereas in the past, we would have only collected maybe 55%. So it definitely has helped from the standpoint of cash flow, for sure.
How about workload?
I'm sorry,
Workload, because there's less, you don't have to
it's
collect it
interesting.
twice a year, that many,
It really has not, let's put it this way, the workload has not changed that much. 16 years ago, we had processed about 93,000 payments in the tax office. I think we're at about 94,000 now. So it really hasn't changed that much. The other part of the elimination of this half a person was the anticipation that the RTM would approve a single installment for motor vehicles. And not only did they not approve a single installment, but they wouldn't go down to a $500 limit or a $250 limit, if you recall. And so, that anticipated change never did occur, so we were really stuck.
do you think that if they had done that, that would have, I guess one of
I
the
think that
reasons
would
I'm
have
asking the
definitely-
questions is the WPCA seemed to be a good test model, and it doesn't seem like the workload's come down. So if you changed it on the car taxes, personal property taxes, do you think that would affect the workload?
Oh, I definitely think it would.
Okay.
But they voted it down so overwhelmingly that I have not reapproached them again.
Okay. Would it reduce it enough to like cut back again at some point? Say we give you the extra person or the extra half of a person.
I think we certainly have to review it again at that point.
Review it
sure.
again. Okay.
Absolutely.
Thanks.
Mr. Brockville.
Thank you. Stan, collect $200+ million in property taxes.
Correct.
What percentage of those are online? People pay online.
2%.
Could you speak to what we're doing here in town to make it a lot higher than 2%? Or why we?
Well, we certainly include it as a part of the payment structure on the bills themselves. It's on our website.
I mean, I tried, not to interrupt you, I apologize, about 2 years ago, or maybe when you first offered it, I tried to go on. It was almost, I mean, with all due respect, impossible to figure out, and had some very excessive fees associated with it, too, if I remember correctly at the time.
If you pay by credit card, that's true. The fees run about 3% if you pay by credit card, but keep in mind, that would be the 3% that is absorbed by retailers when you take your card and go to a retail store.
What other way would someone pay by?
You could do a direct debit from your checking account, that's 25 cents.
So I guess the question is, I'm hearing is that you need more staff to do what seems to be an excellent job that you guys are doing. But in the whole world away from Fairfield on the state level and obviously on the federal level, people are paying taxes. I don't know the numbers, but I'm sure it's substantial, right? People using tax programs and so forth and paying, I know I pay my estimated taxes, online, obviously. I don't send checks to the IRS anymore, is my point.
Right.
And Fairfield is a well-educated, relatively high demographic type of community. I'm sure the internet access is virtually 100%. Why wouldn't we have?
Let me sort of change what I said about the 2%. The 2% is the percentage that are paying through the town's online system. There are many people who pay through their own banks online.
Right.
But I don't count that as a part of the
When you say
town's online
bank-
system.
oh, you see-
In
so
other
they-
words, somebody who calls Citibank or
gotcha.
People's or.
Okay.
So there are plenty of payments like that coming in, but I just don't track that because it
Well-
just goes through our mail.
Right. Let me actually
You
ask.
still have to process it.
That's
Yes,
right, right.
absolutely.
So, yeah, so let me ask it a little differently. If someone does it through the bank, first of all, we set up with the banks, so like I know the way the bank thing works, sometimes if you online to pay your bills to a doctor, for example, they actually cut a check and send it to them. That's not going to help us very much.
No.
But if you pay your bill to, say, Cablevision, that's all done debited electronically. Nobody ever sees a check.
We are
So-
not set up for that.
So we're not set up for that. Why not?
We will be.
we're-
Could I just, as you recall, several months ago, we came before this board, there was money left within the Munis account, which we did an RFP for a new tax system. We are in final negotiations on that contract. And I would think probably within the next, Mr. Bremer has been negotiating with the firm that has been selected. Probably within the next 10 days or so, that contract will be finalized. We've met with them. Mr. Gorzlani and I met with their representative on Thursday past, in which we also saw a demonstration of an online system. It is going to require, and there is before the state legislature, modifications to the state statute as far as things which
For sending bills.
is a pending bill, which we are confident will do. I would say that by the end of the calendar year, you will see dramatic changes in the tax payment system within this town.
And, can I continue?
Sure.
And have we done, so I guess I have two questions coming out of that. And Mr. Bremer's not here, so it's not fair necessarily to ask you, but one, are we setting a target in terms of what percentage of people's taxes or corporations' taxes are paid through some sort of online system? It just seems very inefficient in the year
I
2011.
I think what we've seen, and I could give you examples of other towns where you could go to their websites and look at, and it's a much easier.
There will be a more proactive way to pay your
Yeah,
bills online.
there's going to be a far more proactive way. I think the other thing that you will notice in time is there will also be, frankly, dramatic reductions in mailing charges as far as this is concerned. Because first off, if you own 2 cars, you currently get 2 separate envelopes for each car. Under the new system, you're going to get 1 envelope with one bill. If you own 3 cars, you're still going to get 1 envelope, things of that nature. Additionally, if you start paying online, we're not going to mail you anymore. We're going to mail you the bill online.
That
It'll
was my
be
next
emailed.
question, right, whether the
Yeah.
bills will come email, right. Well, okay, I'll just finish up by saying, it sounds like you guys are on the job, so it's wonderful, but it would just strike me that there's probably a lot of savings, I'm thinking, to be had here, that low-hanging fruit,
Right.
in terms of how we collect our taxes in Fairfield, versus what seems to be a very old-fashioned method, now that I think about it, in terms of what I actually do with the house and taxes and the car taxes, and so forth. So I hope we're going to go forward with that.
Great.
And just as a quick aside, happy to say, Mr. Bremer, the bid came in a little below the amount left in that account, just for the record, but then he and Twig have negotiated a $30,000 drop in their proposed number, so it's well below the budget that was left in that account.
Good. Any other questions, comments, concerns? Seeing none, Mr. Gorzalani, thank you.
Mr. Chairman, can I make one other
Yes.
comment? I'm sorry. And it relates back to a
Had the
discussion
sale, and now
we
you open
had
it back up.
a couple of weeks ago, I think, when we were discussing revenue, particularly the interest income line. And I mentioned the fact of bank fees.
Yep.
There is no, we incur basically roughly $30,000 in lockbox fees attributable to the tax collector's office for the services that are provided roughly 20 weeks a year for lockbox services. That has not been budgeted in recent years, and it's been basically taken out of interest income as an offset to interest income. And we've had that discussion before, and I
Yeah.
think,
So why are we having it now?
well, I'm just telling you that interest income is short by some $30,000 as a result of it.
Okay.
Thank you.
Thank you.
Thanks,
Yeah.
Dan.
Okay. Thank you very much. We're on to page 145, 146, Information Technology. Good evening, Mr. Leslie.
Good evening. It's been an exciting year.
Exciting year. So 146, the requested increase is $90,000 or 5.86%. Of that, $10,000 is health insurance. It's large increases in fees, professional service, maintenance and repairs, and special departmental supplies, are what I see. Mr. Leslie, do you have anything you want to say to start off, and then we'll go to questions and comments?
Things have been shifting. Things are going to be shifting more. The fees and professional services gone up because I've been absorbing a couple of different things, and I'm actually very tight right at the moment with it. When I say different things, it's software maintenance and stuff. Basically, the department's not consolidating, but the fuzziness on the outside is sort of coming in, and monies are coming in, costs are coming in from the different departments and stuff as far as maintenance for software and other things. Sort of the way I see it happening here. And what I did for figuring out fees and professional service for this budget is what I paid for this year and putting it to the next year. So that's the fees and professional services discussion.
Okay, so it went up by $47,000 or 25%.
This is also, that would be also including like the new VMware system that we have has costs associated with software maintenance and stuff like that. They're expensive. We're starting to benefit from the consolidation of the servers into that, and we're working on the disaster recovery system up the Woods branch to bring that cluster up. So we'll have 3 clusters now, and the Woods branch was chosen as the site because of the fact that it's above the water level, so that if the tsunami hits us, the police department and the town are going to be covered, and hopefully we can bring up systems within 30 minutes to keep things working.
Ken, do you mind if I continue and we'll go? All right, so if I hear you correctly, this line is up by 25%. There's 3 issues. Number 1, there's existing services which presumably have some type of potential escalator clause in them.
Yes.
Okay. Number 2, there's additional software expenses that are used to be absorbed by other departments that are now being absorbed by your department.
Right. We're about to put in a piece of pavement software that we're going to be paying for and going to be doing.
Well,
Sure.
Basically, there's
Yes.
cost increases on existing contracts. There's other existing contracts that I would say are an allocation issue. They're coming in from different departments. And then the third thing is there's new initiatives.
Yes.
Okay. So what I'd love to see is how those, in actual dollar amounts, add up to a 25% increase. So what amount of the increase, I'm not saying you need this right now if you don't have it, but what amount of the increase is existing contracts that you already pay for, that's a percentage increase? What is it, is the allocation from other departments that we should be seeing a reduction in the other departments' expenses because it's now being in here? And the third one is, what are the costs of the new initiatives that are
I
in
was
here?
just going to say, to save time, I think the Munis page with the detail has it. I just don't remember if it was distributed. It was. So you guys all have all that back up already?
It wasn't explained like that, though. I want to.
All right, it wasn't
But at
broken
least-
out into the 3 pieces.
Right, exactly.
Personally, I have a real hard time sort of doing the budget the way Munis wants it versus the way it is in my mind. I think hardware, I think software, and I think, software maintenance and stuff like that, whereas all this is put into, a lot of it's put into fees and professional services, and then there's the repair, and, I shouldn't say this right now, this isn't the right spot.
We could
but-
do, Don could give you a little,
I just can't, on a 25% increase, I don't know how much of it is new cost, how much of it is just an increase in existing costs, and how much of it is an allocation issue.
yeah, no, he's got the info, so.
Don, perhaps if you go through the list and tell them.
You
I
want
mean,
to
if you want to go through
Can you
each,
just send it to us?
Yeah, just.
sure,
I-
sure,
as
and I'll
opposed to-
break it, I could sort of do it now, but you'd get a better answer if I.
That'd be great.
Mr. Chair, as long as we're doing that breakout, if fees are being transferred from another department, can that other department be?
It's not so much the fees are being transferred, it's the fact that they were, some of the software was just sitting there and being used and hadn't been upgraded for a while and stuff. And there were some transfers and stuff like that, but I literally just went through what I paid for this year and saying, hey, I got to pay for those software maintenances and things next year. And like one of them was the software down at the Scale House that was just sitting there and it needed to be upgraded and made better. And then we've got fees for converting some of the databases over to SQL. And so, yeah, let me give you a report so that it's well spelled out.
And then again, for any fees that are being transferred from another department into here, if we could have it indicate what the other department is, so we can see if there's any comparable cost reduction in the department that the fee is
Exactly
moving
right.
out of.
Exactly right.
I will certainly try.
Okay, thank you.
Sure.
All right. Mr. Bolito and Mr. DeWitt after.
Thank you, Mr. Chairman. I have a question on the capital. $25,000 for network equipment. What I wanted to know is, we've had some requests for network equipment from the Board of Ed. Can you explain how your department gets involved with that, if at all, and if there's any cost efficiencies or savings to be had by running those requests through your department, or is it just still better to do it separately?
The difference between the Board of Ed and me is sort of twofold. One is, from a capital point of view, they're the big monster in the building, and I'm just a little guy. They have, was it like 17 schools that they have to support? And I've got three sort of big buildings, maybe I'm missing one. Or, well, no, we got the library sort of in there too, but, I mean, they've sort of got some of their own stuff. So from a capital point of view, I don't need as much as they do, so when I ask for something, it's not $450,000, it's like $50,000.
Right.
And but from a support point of view, they've got a medium-sized staff, a little bit bigger than us, but the beauty of that is that when they put one computer in a school, it's the same computer 50 or 100 times. Whereas when I put a computer in a department, there are 5 of them, and they, so that my scale is 5 to their 100.
Right.
So, and I've got to deal with all the different things. We're trying to sort of standardize the computers, we're trying to move to a web interface, and that will hopefully make my computers more generic. But right now, I've got very few generic computers. I might have, like in one department, I might have 5 the same computer, but you walk to the next department and it's totally different applications and stuff like that. And so that's what we're trying to do there.
Okay.
So did I answer your question?
Actually, very well, I appreciate that. The other question I had was, when we began the implementation of the Munis system, one of the questions I asked, and it might have been of you, or it might have been of Mr. Bremer, but one of the questions I asked was, can our hardware handle this system? And the answer I got was, yes, it can. Now, in terms of some of the upgrades we're looking at for hardware for the town, it's going to be compatible with Munis, correct?
Yes.
Okay, just want to make sure. Thank you.
Mr. DeWitt?
Thank you, Mr. Chairman. On the capital as well, what are we paying per PC, per laptop?
I just bought 17 of them for the new systems, which I'd like to mention, but it's $579 for the PC, and it's $1.25 maybe for the monitors.
And what the laptops?
Laptops are, I haven't bought those in a little while. I think they're 12.
We don't do many laptops in town side.
$20,000 worth of laptops this year.
Oh, except for police, I'm sorry, yes, for the, well, the
This
police
isn't
cars,
police,
fire
No,
trucks.
it's not
This
police.
is not police, because that's under the ECC budget.
Those are actually the ones, yeah, I don't know if you remember, I was going to jump in on this. Remember the fire department was the police department was talking about a need for 7 for the patrol cars, and they thought Don had allocated them 5. He hadn't finished that conversation with police and fire. He had just kind of assumed 5 and 5, but he's reallocated because fire hadn't asked for more, so he's assuming 7, the full amount the police wanted in this number, and then 3 for fire. Oh, is it updated?
Laptops,
The ruggedized laptops are for the police and fire department.
yes.
I could have sworn the police department sat here and said it was part of the ECC budget.
Yeah, they
No, no,
double
It
counted.
is,
It was
but it's
taken out of
not.
their budget.
You did take it out?
Yeah.
Oh, all right.
Mr. Chair?
Yes.
Just to clarify on Mr. DeWitt's question, we had a question as to the number of units, because we couldn't figure out the unit price for in the police department budget versus here. Mr. Leslie, how many computers were we buying in this $30,000 total?
There are, I actually counted a little bit wrong because I did another check because I knew this question was coming. And I do a 4-year cycle plan, and they're $3,000 apiece. And so it was 10 computers, which means we have 40 computers, rounded up a touch, I think it was. And it actually should have been 44 computers because it would have made 11 laptops. So that's both fire and police. It's right between 40 and 44 computers that they have, and so I budget for 4 years, replacing, a quarter of them a year, so that's why there are 10 computers listed in as rugged laptops at $3,000 apiece.
Okay, so that's 7 for the police department and 3 for the fire
I
department?
don't budget that way.
But that's what the
That's what we
departments and Don
agreed,
have agreed.
that's what they were talking about, that's what we sort of agreed upon.
Okay.
But
Do you-
my way of doing it is,
Yep.
I've got 44 rugged laptops in both of them. They last 4 years, I'm going to have to replace 10 of them, or 11 of them.
Okay, do they know what's coming?
Do they know what's coming? Yes, I talked to them about this and explained my methodology.
And they've
So
revised
they-
it to
So
7.
they want 7,
So
the fire
they-
department, quite frankly, hasn't asked for any, but I know laptops break and
Right.
things die, so
But-
I
So they
budget
worked it out, yes.
accordingly.
So that the operating departments know what's going to be under the tree at Christmas?
The PD and Don did talk. Fire hadn't formally requested, and Don said to me, well, I got to start replacing some of these. So he proactively built some in, but the answer is yes. I had thought I had recommended a cutback, and then I realized that there was still the 10. I just didn't know how they were allocating them.
And
So it
then,
appears to be okay for PD's point of view.
and then that explains our difference in unit cost, because it seemed like the police were getting a much better deal with their number than we're getting here, if I remember correctly.
I think it was the opposite way.
I don't remember the unit
No,
cost.
they asked for 35,000 for 7. I'm asking for 30 for 10.
Okay, that's what it was, okay. But this reconciles to that,
We've all played happily in the sandbox, and we're all going
okay,
along.
thank you.
Sure.
Mr. Walsh?
I guess I have a quick question in regards to that. Why is the police department budgeting their rugged laptops at 40% more than what you have them budgeted? Because you're budgeting $3,000 per rugged laptop. If I take the 7, in the ECC budget, there's an amount requested originally for $35,868, which you divide it by 7 is roughly $5,000 a rugged laptop. Do you know what the variance is
They may
there?
be including costs for installing and stuff like that, other ancillary costs that are involved with the things, because I basically buy them, put the software on them, hand them to them, and they go from there.
Okay. When the police were here before us, they talked about they needed some of these 7 laptops because they needed to fit some new type of connector that they have in some of the new police cars. New tray.
Tray,
New
yes.
tray. And that was one of the reasons why they needed these 7.
That was included in my price. The brackets included, or the tray, or the stick-it-in thing is included in my price, but not the installation of that.
Not the installation of the tray?
Have you ever installed a car stereo in a car?
Never.
Okay.
Maybe the
That's
mechanic does that, I'm not sure.
That's the issue there. I'm guessing, I don't know. I
So the
can't-
question becomes, who's paying for that installation? Is it in a budget?
I'll have to check with PD.
Jim, I'll make sure we check that out, and that might be an adjustment for the Board of Selectmen. I'll make sure I have that answer and any additional adjustment that needs to be made.
Great.
Don't worry about it.
I appreciate it.
Mr. Stone?
Last item on capital, what is that for, audiovisual improvements?
That camera there, and that camera there, and that camera there. Fair TV's recording this. They're doing a very nice job. I happen to be on the
So
Cable
it's-
Advisory Council for them. And if you take a look, why are we sitting in this room?
'Cause it's
Anyone have
big.
the answer?
AV?
Nothing to
Would
do
you
with the
want to
TV.
be in the first floor selectman's office, or would you want to be upstairs? The point being is that it's for fixing up the 2 conference rooms in the Sullivan Independence Hall to probably, hopefully, work with some of the money that Fair TV gets and some of the money that we have, and do a nice joint combination of getting nice systems in there so that you might be able to have a screen, or you might have some other stuff, but I asked for a lot more and I got a lot less, so what we do is going to be small, but hopefully will be effective and get some cameras in there so that we can record these things nicely, and also that you guys can do like overhead presentations with PowerPoints easily and things like that, just bringing the 2 conference rooms up to speed.
So this will do one conference room?
Yeah, I felt we just needed one like that, and let's see how it works, how many people use it, and try it. But I think it would, we have fewer than certainly the school side, and I think most municipalities have one outfitted conference room for kind of those things.
They do.
so-
You should go up to New Canaan, it's gorgeous. They got
Anyway.
TVs all over the place.
Any other questions, comments? Mr. Kiley?
Thank you, Mr. Chairman. Mr. Leslie, you mentioned earlier your purchase of some PCs, and Mr. DeWitt had touched on this. the price you mentioned, I think, was $579 for the machine and $125 for the monitor. Is that correct? Roughly?
Yes.
Comes to 704, if my math is correct. Can you give me the configuration for that machine?
The new ones that we just got, which are going to be the new System 7 PCs with the Microsoft Office on it, and that's another big fees and professional service expenses. We've been on a freeze since about October, maybe. I haven't bought any new PCs. If you'll notice, my capital budget is still rather high at the moment. That's going to go rather away completely, because I talked to the first selectman when we first started this, and we're going to be doing like a 3-year phased-in approach to bringing in the new System 7 and the Microsoft Office. And if you'll also notice, my training and education has gone up because we want to train the people in the new systems, and we're working with the library to do that. I just lost my train of thought.
I was asking for the configuration on the
Oh,
machines.
sorry, yes.
Yeah. The RAM?
4 gigabytes.
4 gig. Hard drive?
I think it's 250.
250.
And
Processor, is it like today's latest and greatest, or is it a
yes,
couple?
Yeah,
I mean,
they're new HP Elite 8000s, and they're close to 3 gigs, if not 3 gigs. 3 gigabytes, gigahertz, 3 gigahertz, GHz. Okay. Monitors, we're moving up to 19 inches because we feel that the extra space is worth it. If you've
Okay.
been crowded into a small monitor, you can
all right,
appreciate
so
that.
that's a pretty standard machine. The hard drive is on the small side. My question is, what software is
The
included on
hard
that?
drive isn't necessarily that small because we always can, the
Well,
PCs are not
It's
considered.
plenty for what you need it for. It's just not a
Because
terabyte
we got
that you.
servers, you don't have servers at home. I mean, you throw in a 500 gigabyte and not.
I understand.
Yeah.
Yeah. What software comes with that?
System 7, and we've purchased licenses for Microsoft Office 10. Some licenses, not enough for the whole thing because we're going to roll it out over 3 years.
Okay, so does the 704 include the Microsoft Office licenses?
No, that's strictly hardware, that number.
Okay, so how much of the software?
Well, the System 7 comes with the PC.
Yeah, right, yeah.
But not the Microsoft Office.
And how much do we pay for a Microsoft Basic Office Suite license or whatever you purchase? You probably get the business normal one, or?
No, we get a government discount and stuff, so it's, we're getting the Microsoft Office Pro because it's got the whole, it's got the PowerPoint, it's got the Excel, it's got the
It's got
Outlook,
Access database in it, right?
Right.
So how much is that?
I want to say 100-something, but I really don't remember right on the exact number.
Okay. So if it's 150, that takes this machine roughly to 850.
Mhm.
If that, if.
That would
if
seem
that
reasonable
follows.
to me, your numbers.
It's the same question I had of Nancy when she was here for the Board of Ed. That's a lot of money for a laptop
No,
that
that's
only
not the
has a
laptop, that's the
19-inch,
desktop,
or
but-
for, that's even more money for a desktop, excuse me.
Yeah.
That only has a hard drive that big, whether you need it or not.
Hard
And-
drives are cheap, they're $80.
Okay, well, here's my point. That's a lot of money for that machine,
Right.
period. So, I mean, how do we get better pricing on PCs? And I know I've heard about you have to go through the state bid process, but you can walk into a store today
I've been
and
using
buy a
it.
machine that's, let me finish, please. You can walk into a store today and you can buy a machine that is significantly better than this for significantly less money when you're buying one of them. And this is the piece that's counterintuitive to me. We buy, whether it's 15 or 20 in your case, and I'm not picking on you, the topic just came up, but on the Board of Ed budget, they were buying 464 of them, and roughly paying the same price. I'm not sure about the software component on theirs. I didn't think to ask that question, but even without the software, the $700 is just a lot of money, even to pay for one machine that has, at least these components, if not more. And so I'm just lost as to how we get better pricing.
So am I. I do the system. I mean,
Right.
I'm actually been buying off of Nancy's contract. So, I mean, when she puts out those bids, she says town and school.
Mhm.
And so I've got to go through that type of system to do
Right.
it, or I can even go to the other state contract, that, like, where you can go up to the state website and look for
Right,
those
right.
contracts. That's the way I've been told, that's the way we do it.
Okay.
I mean, if you want me just to go out, I mean,
No.
we got to go out to bid because it's going to be a certain amount of money. I mean,
Right.
otherwise, like when I'm doing things now for small items, I sit there and I hit, 3 or 4 websites, see what their prices are, and, even their government websites like CDWG and stuff, and I compare those prices, and I pick the best one that I can find for the price.
Okay, thanks.
Sure.
Mr. Brockville?
Just to amplify one thing that Mr. Kiley was talking
Right.
about. With Twig is back here, I guess the frustrating thing, from what I'm hearing you're saying, is I've had these thoughts myself too, and it probably is not your fault at all, Mr.
They're not
Leslie.
exactly the same kinds of
No, I mean,
machines.
I understand,
You know,
but-
I mean,
Yeah,
they're a bit more tougher and a bit more.
I guess the question I think that might help answer Kevin's concerns and mine, and maybe Twig can answer this, is when we put out these bids, which I certainly am not familiar with the whole process, who bids on it? In other words, if you're saying, and I agree with you, by the way, that you can march into Best Buy or Staples and buy a machine for, say, $500 that we're paying $750 for, right?
Give or
And
take
we
some
put-
change, yeah.
Something like that. And if we're putting out the bid, right, somebody's bidding on it. And I can't believe that if Best Buy was bidding on it, hypothetically, they wouldn't bid higher than what they would sell one at the store for, right? So this question probably doesn't only go for your stuff. This goes for anything that
Yeah,
we're.
a little bit of it is the difference between like buying a power tool in Home Depot and picking the cheapest drill versus buying a power tool in Home Depot and buying the professional grade. We're getting professional grade PCs. We're not getting necessarily home consumer PC. So, I mean, it's a small difference, but, I mean, I think it is a little bit significant there that would
That's
push up
not the
price some.
majority of your difference in price, though.
No, I wouldn't think so. I mean, I don't, I mean, it's, when we go out to bid, it goes out to, we get.
Can we, Mr. Chairman,
Major
just to
state
try and
bidders.
try to square the circle here, because this is a question that comes up every single year and so forth. Do you mind if I ask Twig to just speak to that? I'm just curious who responds to these bids, and then why would the
They can
bids?
give you the bid sheet to show you and just
No,
send
I
it out.
understand. I'm just wondering who responds to these bids and gives these prices if we all seem to agree that the prices seem high. And correct me if I'm wrong in any of those assumptions.
Yeah, I haven't worked directly with one for several months. Phil Ryan on staff handles that, so I'm going from memory. But I believe we get bids typically from
CDWG.
Hewlett-Packard. There's another,
PC GovMall.
Yes.
And also Ergonomic Group is a big one in the state, and they actually come in consistently lower price than most of the others.
Does CDWG, are they, our company buys from CDW all the time, and we seem to get better pricing than you guys do. CDWG ratchet up their prices to deal with the government entities, as opposed to CDW that deals with businesses? Do we know?
Or do we check?
Or do we check?
The
Right.
prices have been, it's either the same as the CDW price that I've seen, because I've done the web thing
Right.
too for other different pieces. And the prices are basically the same or a bit better than the regular CDW price.
So compared to corporate prices you've seen, these are not incompatible.
Yeah, no, I mean, for for 1, 2, 3 pieces and stuff like that.
Well, 2 minutes ago, I thought you said that you thought it was high.
Yeah, I mean, with the monies you're talking about, I mean, $800 for a PC and a monitor seems high. I mean, but I'm also getting older, and I used to buy $5 worth of gas for my Volkswagen and drive around when I was a teenager in '73, and, everything seems expensive nowadays to me.
Thanks.
what my department can do, if you'd like, is we can get a couple of specifications from Don for a couple of different standard PCs. And we can go out and look at some of the latest prices. We can look at retail with Best Buy. We can look at CDWG, the real CDW,
Right.
Hewlett-Packard. We can look at a couple of different sources and come up with some
It would be-
baseline
it would-
pricing for you, just
The interesting thing
that
right
would help.
now, from a purchasing point of view that I've seen that sort of irks me, because I used to hate this when I was a network person, was that we got the bid through PC GovMall
Yeah, let's,
for this current set. And
yeah,
let me
let's
just
get a
finish one
copy
little
of-
point.
Can you do that, and then let's get a copy of the specs?
Sure.
And if
Thank
we
you.
can see the specs.
My one little point is that I'm writing the PO directly to HP, yet PC GovMall gets the benefit of it. So why doesn't HP give me the price directly versus going through a retailer.
Well, I guess that was a question I had, was why doesn't somebody try to call up Dell directly and say, I'm going to order some 100 number worth of PCs, what's the best deal I can get? Same thing with HP.
That's what the bid's supposed to do, so maybe the bid
Yeah,
system's
we have to go
broken.
through public bidding, there's a procedure, we can't just call somewhere and say, hey, undercut the bid. It just doesn't work that way in government.
No, I know.
But I will say to you, that my guess is, they have all, the Munis is on there, there's all kinds of software on there. I don't know if that causes more requirements in the spec versus a home PC, I assume it does. But they're happy to give you the information, I don't think it's a budget issue. The purchasing has to do what they have to do, and they do the best they can.
All right, thank you.
We'll
Go
put some
ahead,
stats
Mr.
together
Stark.
for you and email it to Tom.
Thank you.
What's the threshold that we have to go out to bid?
Let's talk about this separately. We're going to review this in April.
Okay.
We're going to review the entire purchasing policy in
All right,
April.
so you-
Right.
All right.
Is that okay?
Yeah, I
Yeah.
was just saying, we could,
Yeah, I mean, Twig, what's the
Follow-
threshold, real quick, for we have to go out to bid? 7,500.
keep them under
Yeah.
7,000.
Couple of the other items, Don, that have gone up in your budget, the maintenance and repair of equipment, was there a reason why that's gone up by 28% this year?
Don, I just want to remind you of something that you said to us at the
Okay.
Selectmen's hearing. If you see your communications line was down and you asked for the latitude to move things out of the communications line to more properly where they belong.
Right, some
I
of
don't
it's-
recall what they were, but there's a net wash of that 146 through some of these other lines that have gone up. And Don can explain the exact
That was the
spec.
$25,000 for ChimeNet for Cisco Smart Maintenance, because that's maintenance on the hardware. And then the Liebert UPS maintenance is there, which is consistent. Telserv phone maintenance is, actually, I'm going to have some money left over this year because we've been sort of doing a holding pattern on the phone system because we don't want to put good money after bad. So there's some money left there.
Can we
we're-
just get a schedule that breaks out the reclassifications between the line items? If you could do that, that'd be great, to help
Sure.
us understand it.
And you got the
'cause-
Munis.
I think the big one,
maintenance.
the big one is the ChimeNet thing, and I think that's
Well,
what
that's
makes the big.
25.
And I think
1,000.
Munis is hitting the rest of it this year, because
But-
Tom had taken part of it in the account the first year. So I think there's a Munis bump.
Yeah, but the total change here is, 128 to 146,000, so it'd be great if we could understand
Yeah,
where
no,
these
he's got a
things have moved.
schedule that I think was in the
Okay.
backup too, but.
Yeah, because if you look, you have 148,000 between two accounts, maintenance and equipment and special supplies, and you have 146 moving out of communication, so it'd be good to know what's moving and what's changed.
Okay.
Mr. DeWitt, my apologies.
No problem. Every year we talk about leasing vehicles. Have we ever thought about going to a CSC kind of solution? They own all the computers, they break, you get another one. Kind of we're talking about almost 1,000 computers, right, with the Board of Education, right?
I could have, Paul, the ones the town did it.
We
the Board of
had-
Board of Finance actually opted not to do it
Yeah.
anymore, about 5
This
or
goes
6
back
years
into the
ago.
late 90s, actually, when the, I want to say probably around 97, when the town had made a significant investment to upgrade both the town and Board of our hardware system, overall, town and Board of Education, which was quite a bit behind time at that point in time. And I think there was a major effort, I know there was a major effort to upgrade that, and most of that equipment was leased. If not virtually all of that equipment was leased at favorable pricing. It was also at the time when we started to get into major construction stuff, and we said, hey, we're going to be going out to the money markets all the time anyway. And the rates that we were able to achieve by going out to the money markets were lesser. I think, with the leases, usually on hardware that we haven't done any in probably 10 years, are 3-year duration, most of them, obviously, that can be negotiated. It's something that we could look at again. We haven't looked at it in 10 years. And frankly, the concern is that we were going to be paying someone else more money as a broker, in a sense, for the leasing, with some other financial institution.
Plus the 5 or 6% of your interest.
Plus the fact that we can't cannibalize then, plus the fact that we have to sit there and tag every single thing. Plus the fact that when at the end of the lease, after 3 years, they really don't want them back, but they have to take them back, so you got to count every single PC, whether it's been cannibalized or whatever. I've been through it before at another company, and when you sit there and after 3 years, you try to find every single PC in the company, it's a nightmare. So, no, I'm not.
I do think we stretch a lot of our PCs to about 5
I mean,
years.
I've got PCs on my network that have, I've got a PC in the DPW that's listed as a fire PC because it got moved over there. So, I mean, when you sit there and do these leases, you think, oh, yeah, they're a nice, solid thing, and they're going to stay there. No, they're very dynamic, they move a lot, and we couldn't touch them either. We couldn't sit there and add anything to them. We couldn't upgrade them or anything like that either, because they're locked in. You can't play with them, I can't cannibalize them, I can't sit there and, I mean, one thing was we were running out of disk space on some machines. Well, for $50, I bought some extra disk space for some of the machines. Couldn't do that with a leased PC, I'd have to go out and get new ones.
Mr. DeWitt, you okay? All right, any other questions, comments on this budget? We do have some follow-up items here that we'd like to understand, the movements between the accounts and the movements from other departments, to make sure we
If by
understand.
Friday, maybe by
90,000.
email, Don, that'd be great.
Sure.
That'd be great, that's right.
Can I add one that I want to add to the departments too? For
You can
next year?
try, sure.
Not if it's not
Well,
a request.
not to change the budget now, but to let you know that next year I want to do this.
Sure.
Okay, cool.
All right? Mr. Wells?
Mr. Flynn, it might be helpful in the next year's budget, if when we're putting down some of this technology purchases or the capital outlays, that we put the number of PCs that we're replacing. Because there's nothing on here that says that, and as hopefully technology continues to go down in price, if we're looking at $60,000 from year to year, if prices are going down, we're actually buying more PCs. So it might help from year to year to know how many PCs we're buying. So it would just be nice in future years. Some of the stuff I understand, network equipment, that could be a lot of different things.
Can I use the Munis system the way it was meant to be and use the detailed line items to price out the PCs and the monitors properly?
Yeah, in the detail, I think a lot of that's there, I
You can
think.
use it for your own tool, but we have a certain way of preparing the budget that the policy and administration has decided upon.
Okay.
But Linda, you've got numbers of PCs in there. So I think some of this is in the backup that
Oh,
we
some
had.
of this is in the text,
Yeah.
right.
Yeah.
So we have to get you that material if you don't have it.
Yeah, okay.
Don was talking about
It's a
using
valid point,
the other
Mr. Walsh.
method.
Can we just make sure that it's highlighted within the,
Like
instead of...
standard things like printers
Yeah.
and PCs and laptops, like,
Well, if you look at page 148, I think what Mr. Walsh is saying is, nowhere on 148 does it give numbers as to what they're trying to replace. It just has overall lines replaced.
But I think there's a backup in the Munis reports that has that stuff,
Sure.
and that should
Yeah,
be
I
in the
just
back
think
of your
it should
detailed
be,
book.
I just think it should be, yeah. Don't make us hunt and peck for it.
Oh, come
Yeah.
on.
I mean, you can back engineer it very easy.
And you'll
PCs
be
are
aware-
Okay, Don,
recycled,
duly
too.
noted, right? Don, duly noted, right?
Yep.
You'll put the numbers in. Good.
Okay. Page, thank you, Mr. Leslie, we appreciate it.
No problem.
Page number 150, the Board of Finance.
Thank you, Don.
Yep.
Thanks. $6,500 increase, Mr. Hiller. Is this a contractual increase for our auditors?
It is, I've spoken with, it is almost 100% that. It's not almost, it is 100% of that.
But is it contractual?
It is, we put out an RFP 2 years ago with an RFP. This is below the cost that they have quoted on that. I've spoken with Mr. Centofanti, and he's comfortable with this number. There are some other.
I don't care, is he comfortable? I care, are we comfortable?
We're comfortable with it.
Well, how much was it supposed to be and how much did your haircut?
There are, on this line, there are fees that are paid also for our recording secretary within this line. Their fee was I think, 98,000. I'm going from memory for the coming year. And so we're below that number. We're significantly below.
How much are we at?
I'm sorry?
How much are we at?
How much are we below?
Yes.
We're estimating a $90,000 fee for, $91,000 fee for the audit.
Question, comments from board members on this?
no salary line for the Board of Finance?
Always missing.
That's funny. It's funny, given we're going to talk about yours tonight.
Well, we get to you next. All right. Any other questions, comments? Seeing none, the last item here, and then we will go to the public for any comments. I know that most of them are town managers and employees. Page 151, 152, unemployment compensation. Mr. Hiller. Up by 36%, $45,000.
We asked for $170,000. Our current expenditures year-to-date, on the sheets that were given out earlier this month, we had spent for 7 months $120,000. Our reimbursement rate for the month of February was slightly over $20,000. So through the month of February, we have spent $140,613 on this line. As you can see, in 2010, we spent fractionally under $198,000. It would appear that we're probably going to be in the same range again this year. These costs roughly currently, and there is a certain degree of seasonality with it. Of the $20,000 spent in February, roughly 14,200 was attributable to the town. Over $5,800 was attributable to the Board of Ed. On a year-to-date basis, roughly, it's about a 50-50 split as to where we're running on that between the town and Board of Ed. I think the other thing that you should be aware of is we do get, which is a new phenomena in this, as a result of the economy, bills not on a monthly basis, but on an irregular basis for what is called extended benefits. These are for people who have exhausted their regular benefits and qualify for extended benefits under current federal guidelines, which have been extended up to roughly about 100 weeks now or something like that. And we are paying those, both for the town and Board of Ed.
Mr. Tetreault?
Thank you, Mr. Chair. Mr. Hiller, if I heard you correctly, you're pointing out that in 2010, we expended about $198,000.
Yes.
You pointed out that in 2011, this year, we're on a run rate for about $198,000.
Well, as I say, if you were to annualize what we've got right now on the 140, we'd spend 210, because we're two-thirds of the way through the year at 140. 50% more becomes 210. We would think that number would slack off some, because the major thing that's hitting the town right now, and will for at least one more month of benefit payments, because there's a lag on these, are the seasonal workers related to the golf courses.
Okay, I'll take that as a yes. For fiscal year 2012, we're budgeting $170,000. What's going to change?
I guess what's going to change is partly in some of the discussions we had earlier this month as far as revenue things are concerned, that we're looking for a little change in the economy, and that some of these people who have been collecting benefits are going to find employment. We are looking for, as Chairman pointed out, 36% increase in this budget, which for the last several years we have not covered.
But that's up from $125,000. We've been running at $200,000. We expect it to go down 12-15%. Is that, and we expect the economy to improve enough to cover that?
Well, I think one of the things that is not going to go away, for example, even if the economy does improve, we're still going to pay the unemployment benefits for the seasonal workers at the golf course, which is a significant portion of the town benefits that are paid.
Okay, so you're describing that a big portion of this number isn't affected by the economy.
I think where it's affected by the economy is the inability of these people to find other employment.
Okay, thank you, Mr. Chair.
So, Mr. Hiller, just to be clear, because I remember this conversation from last year, when we hire somebody for a season, whether it be the golf course or as a lifeguard, should we hire them for employment and say, you're going to work from April through November, and they know fully well when they go into the job that that's the shelf life of the job, then we turn around and the job's over in November or October or September, whenever it is, they can immediately go and collect unemployment.
That is correct. The classic example of this is we have school crossing guards. School calendar is very well known. It's 180 days a year. There are certain vacation periods. They are eligible, a school crossing guard is eligible to collect unemployment benefits on Christmas break, winter break, spring break, et cetera, under state law.
So in essence, they get paid for their breaks as well as they get paid for working during that period of time.
That's correct. Unless they have other employment, which would offset it.
Of course. I'm going to go to Mrs. Leclerc, Mr. Brown, then I'll hit Mr. Tetra and Mr. Walsh.
What would be the cost difference to keep them employed at like a different seasonal job? Is there,
One of the problems is we've looked at that, particularly with the golf course employees, and what I'll call the deal breaker on that is the benefit cost that we would incur if we were to, because these people do not receive any benefits other than Social Security, Medicare payments on our behalf. And so the vacation time, the health insurance, and the pension payments would go in there. And so when we've looked at it, it doesn't work because of the heavy benefit costs that we would incur.
Mr. Brown?
I believe last year we talked about taking this unemployment compensation and charging it back to the department. And therefore we can kind of monitor who's having the unemployment compensation issues and who's not, and we could talk about it per department. And I think it would enable us to track it a little bit better.
We could, and we can provide that. We can, the only thing that we can really provide immediately would be a split between what costs are attributable to Board of Education employees and what costs are attributable to town employees. We've had, and the Board of Education has had, several cases that I'm familiar with in here, which are related to, frankly, to some terminations or some negotiated terminations. We've paid some significant benefits as far as that's concerned. Both the town and the Board of Education contests the applicants as far as their willingness to play, but in the statutes in Connecticut under the Labor Department are pretty well stacked against
Mr.
us.
Hiller, can we get the breakout that Mr. Brown suggests that we asked for last year regarding where we're hitting this? To your point, Mr. Brown, I'd like to know specifically, what is the golf course costing us? What are the beaches costing us? Because in reality, those are operating costs of those entities. So as well as the Board of Education.
I think,
Mr.
and I
Brown,
think
are you-
in the Board of Education, I think they'd have to do the same thing as to whether it's,
That's fine. Mr. Tetra?
Same question, cut a little bit differently. Of this of the 200,000, how much of that is seasonal employees
Right.
versus non-seasonal employees?
I'd be guessing, and I'd rather get some more data back as far as what it is. It's a significant percentage, I think. But it's, when I say a significant percentage, it's probably fractionally over half, I think. And I'm not that familiar. I speak probably every other month with Mrs. Fitzgerald and the Board of Education, and just reviewing the names that are on the list. It's broken out by name, and, become all too familiar with who a certain individual was and why they're
It just seems there are three big buckets of seasonal employees that aren't going to change: lifeguards, golf course, and crossing guards. Given that, this 30 grand improvement we're projecting could actually be a 30% improvement based on the economy. And from this board standpoint, the question is, can we plan on that type of reduction or improvement in the economy? Or do we need to increase this cost because it's well below the run rate that we've been experiencing?
And I think the other factor there, too, is that where we've looked historically on this is the benefits have been extended, continually over the last, virtually over the last 36 months, where the
Is that another argument for not cutting this number?
Mr. Walsh?
Thank you.
My questions have been answered along the way. Thank you.
Sure. Any other questions, comments, concerns on this line item? Seeing none, we're going to go to the public on the financial departments and the unemployment compensation we heard from tonight. Questions, comments, concerns from the budget, from the public on these items? Any of them? Please, Mayor.
Just to let you know, lifeguards normally don't file for unemployment.
But they could, right?
But they, well, most of them are students, and if they're in school, they're not allowed to do that.
Good.
So most of the rec employees that we get who run the summer camps and do that, they don't file because they're students. Most of the people who Scott Bartlett hires for DPW are again students. Now you have some departments, for example, conservation is a longer period of time, they start earlier, they don't rely just on students, so they're gonna have some people who are going to work the summer and then not be able to continue working. And also, we use them for the to Paul's point, we use them 35 hours a week during the time when we really need them. And they would use up their 1,000 hours for federal standards before we have to give them benefits if we have them any longer.
Great. Thank you very much. I think it just proves the point that it'd be very good to get a breakdown by department as to what this is, so that we, in actuality, this is a departmental cost for those departments that they're not being charged for. So their monitoring of how they use their seasonal staff and how many seasonal staff they hire is not impacted by the fact that we then have to pay unemployment insurance for those individuals, or compensation rather, at the end of it. So there's no bad guy for them to absorb. They're just absorbing the cost, and then they're getting a quote-unquote free ride on the excess cost on the side, and we need to know that, I think. Thank you. Anybody else? Seeing none, we'll come back to the board. We're done with going through the departments on the budget, and we have two items before us, and that would be just a brief discussion on the first selectman's salary. I just did public comment. First selectman's salary and the town clerk's salary. Now, we will not be setting those salaries tonight. We will vote on those salaries next week, but we will be having some discussion of those salaries this evening, and then we'll go into our general budget discussion. Mr. Hiller was so kind as to do a survey of various municipalities around the state regarding what they pay their mayors and first selectmen, as well as what they pay their town clerks. I'd ask that he pass that information out, make it available to the public, and with that, I'm going to ask for a 5-minute break, and we'll come back and continue the discussion. Thank you.
Chair?
Yeah. All right, everyone, we're back. Great, Mr. Hiller's not here. Where is Mr. Hiller? All right.
You want to buy some computers.
Yes. All right, Mr. Hiller, before us is your document from CCM on the municipal salary survey. Would you please walk us through the document briefly?
Yes, sir. We, as I indicated to the chair earlier, we frankly, the CCM publishes a disc annually of various towns by population. Fortunately, that was just updated today at 3:30 when the first selectman's office received it. So these are based on the salaries, I presume, as in our case, as of July 1 of 2010 for fiscal 11. And the towns that we selected were based on basically three criteria. Regional geography, as you'll see, there's predominance more of what I'll term southwestern Connecticut, in the broadest sense. Many of our AAA towns, and also some that are reasonably similar in size as far as population, being in the 60,000 range. The highest number clearly being Norwalk and Danbury, but we selected them because of geography and Fairfield County. So it is what it is. I think the footnotes, West Hartford, as you may see, does have a town manager. They have a city council form of government, and the mayor's position there is, not totally familiar with it, but doesn't have the same job description as, say, a first selectman here would have, or a mayor in Norwalk, as an example.
Okay. Now, before us, Mr. Hiller, and correct me if I go wrong, we have a 4-year term for both the first selectman and the town clerk,
That is correct.
and we need to set salaries for both positions for that entire term before those terms begin.
That is correct. When you act, I presume next Thursday evening, on these salaries, and we did distribute, I believe, last week, the minutes from a similar meeting of 4 years ago. Your older brother, I think, Mr. Flynn, made the motion at the time, and what we did, which clearly is within the intent of the statute, is to set a salary for the first 2 years, commencing at the term, which would be, I think it's the third Monday in November. That would run through the third Monday in November of 2013, and then an increase in both, well, in all 4 positions, because I remind you also that the selectman's position also is a salaried position without benefits. And those salaries would, at the pleasure of this board and the RTM, increase mid-November 2013.
Question, can we do it so that the salaries can increase annually as opposed to through 2 tiers? In other words, we're setting it for a 4-year period. It is possible that we remain salary flat for 1 year and increase it by a percentage in the second year, increase it in this percentage by the third year, and so on. Is that not correct?
I would have to believe it, again, I'm not an attorney, nor do I have access to the statute, but I believe that because that's not dissimilar to what you've suggested, or what we've suggested and have done for the last 4 years, because all we did, what you're suggesting is an annual increase as opposed to a biannual increase.
Correct. Can you check with the town attorney and make sure that's within our rights if you're not
Yes.
sure? So that we'll have something that we can discuss.
Correct.
Or we can finalize next week. Questions, comments from board members on this item this evening? Mr. Stone?
I think we got to be, we're discussing this? Totally?
Absolutely.
Okay. I think we got to be very careful, because the first selectman is the one that's negotiating these contracts that we're having right now. And if we start raising his pay or her pay, I don't know how that's going to go with contract negotiations, in the future. And also, right now, we're the highest of any of these things except for West Hartford. And, you look at some of these towns that, Greenwich has 62,000 people, and it's 121. Norwalk, Hamden. So I don't know right now whether I'm in favor of increasing it or just maybe doing a cost of living, adjustment, something like that. But I think we should be very careful because of the contract negotiations.
Thank you, Mr. Stone. Mr. DeWitt?
Thank you, Mr. Chairman. Having read the notes from the last meeting, which were very helpful, thank you, it appears as if a flat percentage was placed on the first selectman, the selectman, and the town clerk. Is there any reason that it needs to be that way, or could we independently discuss?
What do you mean by flat percentage, I'm sorry?
Well, it appears here that everybody went up 7%.
Oh,
Mr. Wally Flynn moved, Mr. Tetro seconded, to set the salaries for the first selectman at 7%, and they basically all went up 7%.
No, that's incorrect. I wish we had an increase like that.
In
It
the
went up
first year was an
3%,
increase
and then
we gave
3% 2 years later. So I
Got
don't
to look
know.
at the final vote, because the salary on the first selectman up until November of '9 was 120,000. And then it was increased from 120 to 127.
No, it went up 2 years by 3%, and then the next 2 years by 3%. Trust me, I know.
Oh, yeah, Mr.
Yeah, there
Mr.
was-
Polito just pointed out they withdrew that motion, but
Right.
it doesn't seem,
Yeah, but to your question, they don't have to go up by the same
they can be
percentage.
independent, we can discuss.
They're independent.
They are
That,
independent.
again, is your call, and again, to be ratified by the RTM.
Right, okay, thank you.
Any other questions, comments on this item?
If I could just comment on Mr. Stone's comment, I think it's a very valid point that we are obviously in negotiations with all the unions. I think the difference here is,
Can I interject?
you get,
As a point of
to use the
information?
cliche, one bite at the apple. Because you can't, once it's set now, you can't change it again.
As a point of information, this really is a Board of Finance selected official rule. I think the rest of us probably shouldn't give them much in the way of opinions. This really is your sole prerogative, and it's kept that way specifically so the selectmen don't have any, role in it one way or the other. And I think other employees of the town shouldn't really comment on this. I mean, if the public wants to, that's fine. But I think it's always traditionally been a Board of Finance prerogative. Just for the record, as you know, I think I said this in the beginning of the budget hearings, I did indicate and assume a projected 2% increase in the coming year for department-exempt department heads. I think I mentioned that in my original presentation. So I just wanted to informationally mention that kind of commitment that was, because they didn't have an increase this year.
Thank you, Mr.
Thank you.
Flato. And I don't have a problem with Mr. Hiller providing information to us in terms of what's been done in the past and things like that. Any other questions, comments from board members on these two items? The one thing I'll opine on a little bit, Mr. Stone, I think your point regarding the negotiations and that, I think that's valid, and it's really kind of, you're all in it together is really the way it works, right? That being said, since it is being set over a 4-year period of time, that would be a heck of a long time to not do something, right? Right, and the fact is that within the negotiations, our understanding is that the conversations were around a 0 for 1 year, and then differences in subsequent years, and at least the contracts that have been in public, the public dialogue have been in that way. So it's just a thought, and the thing is, setting it for a 4-year period, that's a heck of a long time to have to do it, but given the length of the term, our understanding when we first did this 4 years ago is that's what's required. So you could not do it within the term.
Correct.
Yeah.
You can look at this once in 4 years.
That's exactly right. Mr. Brockville?
Thank you. And I would just like to add that I think this is a somewhat sensitive political issue, but I think we should never lose track of the fact that we have a first-rate first selectman, someone who works very hard for the town, and we want to always have first-rate first selectmen and town clerks. So we there's two things being weighed off here. I just want to make sure that we're not, if we think that a raise of some sort is deserved, I don't think we should not do it solely for the reasons that have been stated.
Right.
While at the same time being mindful of the appearances.
And remember, and thank you for that, and remember, and it's easier now, but remember that we're not talking about a specific person and a raise being for the person, we're talking about a position, and it's the position that we have to.
Right, and also.
Positions,
Right,
actually.
and also, to just build on that, is that the way budgets are built in general is by looking at what was and then usually adding to it, sometimes subtracting. And so it goes without saying that any steps we take here today for this 4 years actually has implications for 4 years after that and 4 years after that. And I just want to emphasize that I always want to be in a position to draw the best possible people for a very important job that we're talking about here.
Thank you, Mr. Brockfeld. Any other questions, comments from board members? Seeing none, I'll go to the public. If anybody has a comment on this issue, I'd only ask that you come up here and speak into the microphone. And seeing none, we're back to the board, and we'll vote on this issue when we vote on the budgets on March 31st. So now we're at the point of our meeting where it's basically, it is public executive session, so the public will not be involved in this or asked to, are allowed to speak, unless, of course, some of the department heads are here. If we ask you to come up and speak to get a point of clarification, we would appreciate you being part of that dialogue. This was actually a session that was added to the budget calendar 2 or 3 years ago. And the idea being that after having gone through the entire budget, line item by line item, over the past month, it would be good if the board had the opportunity to discuss amongst ourselves our overall feelings for the budget, given the fact that we'll be voting on this collectively in a week or so. In addition, the Board of Selectmen will vote on it first, and this is our opportunity to discuss amongst all of us what we've heard, what our hot-button issues are, what our concerns are, and what we think the opportunities are. So it's a pretty free-form dialogue. At least that's the way I'd like to have it be, because I think that's the way it's been the most productive in past years. With that, I'll ask Mr. Flato.
Tom, I actually was not going to start the dialogue initially, but if it's okay, and I apologize because I thought we were going to do this earlier, there was additional information that was requested by the members over the last few weeks, and it hasn't been passed out yet, so, which I don't understand. So the risk fund in particular was updated.
Perfect.
And the health insurance schedules are updated. So I wanted to make sure you got that before
No,
the
that'd be great.
conversation.
And they were not passed out because I knew they'd come up during this.
Okay.
So I asked Paul to hold on to them because I knew that would be the first one. So that was me. So that's fair. Thank you.
Yeah, and just to give you rather than going to whole long song and dance, the good news is nothing is worse than we talked about a week or two ago. The latest numbers in February on health insurance are actually trended slightly better. So in each case, the overall numbers in the risk fund that you see annualized projected for the next fiscal year are a couple $100,000 improved than what you saw a few weeks ago. And that's kind of the quick summary.
Okay, so what we're looking at for benefit of the public is, and as you might all be aware, the hot topic of conversation for us over the past several weeks has been the balance in the internal service fund. And the fact that in 2010, a credit rating agency issued some commentary that they thought our internal fund balance relative to the liability was low. They cautioned us about that. And the go-forward projections we had that fund balance coming down by a substantial amount. The new information presented before us has that fund balance going from a July 1st, 2010 cash basis of $5.2 million or $5.3 million to, at the end of this June, $4.4. And if we were to approve the budget as it currently stands, right, Mr. Flato, it would go down to $3.1 million. So it would be roughly $2.1 million, $2.1 million below where we were on the balance basis, cash balance basis, as to when we received that comment from the negative comment from the credit rating agency, right? And this, Mr. Hiller, if I'm understanding this correctly, this is updated for all the best available information that
We have received estimates, I think, which has been forwarded to the board, particularly on the medical. If you look at the top on funds 361, 363, and 364, which are really just accounting numbers, which are the town and Board of Education medical.
Right.
On the actual through February 28th. And the revenue estimates are those that carry forward, verified by my department and Mrs. McQuain's department through the balance of this year. The second sheet gives the carry forward balances and the current projections as received from Aon based upon the experience through February 28th. And on the revenue side, similarly, those revenue items that are reflected in the budgets as they are before you at this time. On the risk management fund, which is essentially three major components: workers' compensation, general liability, and town property claims. The experience on workers' comp reflects an annualized figure based on a 50% increase from where we are year-to-date in that fund, and estimates from the town attorney on general liability claims. Many of these are footnoted. And again, on the second page, the revenue estimates, the one major claim, I guess, is on the workers' comp claim projection. The $1,872,000 is the budget, is the figure that was presented, I believe, last week on the updated estimate from PMA as opposed to what's in the budget at $1,550,000.
So, Mr. Hiller, to confirm, the total revenues before us on this page too, which is July 1st, 2011 through June 30th, 2012, those tie to the budget that are before us.
Tied to the budgets before us, with the exception of the workers' comp claim.
Well, no, I'm not talking about the claims, I'm talking about the revenue.
That is correct, I'm sorry, yes, yeah.
Right. And so on the bottom, the expenditures are the best available information from our outside consultants.
That is correct.
Okay. So, and the point you were making then is, on the general liability side, we have roughly, if I recall, $675,000 budgeted.
$675,000, $1,550,000 budgeted for workers' compensation.
Right, which the 675 looks like a good number based on the general liability and town property claims, and the 1.5 million looks low based on the 1.9 or 1.872 here. Right. Questions, comments from board members? Mr. Tetro?
Mr. Chair, it seems like both in the risk management area and in the town medical, there's a pretty, and in the Board of Ed medical, there's a pretty significant difference in the fund balance as of 7/1/11. Could somebody step us through what caused those differences between what we were looking at and what we're looking at now?
The difference between what were projected a couple weeks ago, Mike, is that?
Well, between this sheet and this sheet. So I'm going to say yes, but it would be helpful in the future if there were dates on these sheets so we knew which version we were talking about. In lieu of dates, I'd settle for color
If you look
code.
down the bottom, I guess there sort of is a date way down at the bottom, which is the file number, which shows 3/18/11 on the bottom when our file was created.
No, 3/08/11.
Yeah, I think
Aha.
Mary could help on the workman's comp, and Paul and I could help on the health stuff.
It's just a roll forwarded time, that I can tell.
So is the answer to that question better experience?
On the health side, both for the town and the Board of Ed, it's better experience in the last few months. I think there was a slight adjustment on the workman's comp, but I forget if that's...
$320,000 difference.
Yeah, Mary could probably tell you for a minute if you'd like.
It's exactly the same scenario that I gave you, that we used the mathematical formula or an industry standard when we set the number. Clearly, it wasn't working. We are still using an industry standard, only we've done it on a shorter payout time, so it's boosted the number a little bit for workers' comp.
Okay, other than without having to do the math here, other than the change in the beginning balances, how much of the 6/30/12 change is due to a different beginning balance, and how much is due to what the projection in the budget is for next year?
Should all be the projections, right?
Not if the beginning balances change that much.
Well, but the projections affect the rest of this fiscal year, which would change the beginning balance for next year. So if this fiscal year ended up a little lower, that would extrapolate to next year's beginning balance being lower, and then the experience projection for next year being a little lower as well. I don't happen to have the old schedule in front of me, but I know, I don't think they didn't change the revenue side much, right? So,
I guess, Mr. Chair, it's getting back to your question. You asked about revenue. And I'm looking at the expenditures in Safer Workers' Comp. They look pretty close. 1872, 348 versus 333, 92 versus 84. So it looks like it's all in the beginning balance of 402,000 versus 81,000. And if our experience changed that much, shouldn't that have impacted the current year more?
You're comparing an earlier version of the schedule, correct, Mike, to come up
Yes.
with those differences?
Yes.
That's what I wanted to make sure you were doing.
Yeah, according to the file name, it was done on March 8th. This one's done on March 18th, so a 10-day difference.
Right. Which in that 10-day difference, Mr. Hiller,
The
you
10-day
received the
difference is
February
basically
experience.
that we received on the 17th or 18th, frankly, a little ahead of schedule from Aon, the projections, both the Board of Education and the town, on updated numbers through February 28th. We were dealing with, at that time, on 10 days earlier, the January 31st figures.
But the big change on the workman's comp side, I just looked at, Jim had the old schedule, they had used the wrong number. The number that was being used was they gave Paul and Mary different numbers based on, I guess, length of accrual, or whatever you want to call it, length of claims average, and they recommended using the middle one, the middle forecast. In the past, we used a 5-year average. They recommended using a 3-year average. The sheets that were given out 2 years ago used a 1 or 2 year average, which was not really appropriate because 1 year was an anomaly. So they used the kind of hybrid, which was what the actuary recommended, and they adjusted that number. So that's why the 2,000,005 went to 2,000,001, whatever this 2,000,001.
I think if I could add this,
And that's changed in the last 10 days.
The number
What
in the
actually
earlier one,
happened,
the number in the
what
earlier
we
one was the
do
wrong
on
number,
workers'
to
comp,
be honest with you.
we set up essentially a bank account in which the administrator draws upon the bank account. So we have to have on deposit with them certain funds that they draw automatically. We get a full accounting, which is audited on this. They basically drew $6,000 was all they drew, I think, for the month of February.
It was basically an erroneous number.
And so what happened was the February draw was only $6,000 in the workers' comp account. They normally draw in units of $125,000. And so we could hit April, and they may draw $250,000, frankly. That potentially exists, and we've had that happen in past months. What we've done is just taken what we've paid out and kind of annualize it. It's an estimate.
Well, I thought
There's some mathematical basis to it, but,
I thought you used the actuary's 3-year.
Well, the 3-year plan, which is the 32-month
Right.
estimate that's included in the expenses for fiscal '12, is the $1,872,000 figure.
Okay, and that number hasn't changed in the last 10 days. So what changed in the last 10 days?
What changed in the last 10 days is that the draws in the current year, in fiscal '11, were very minimal in the month of February.
So we're saying the actuals for 1 month make this difference.
All we were doing was taking an average monthly cost based on what was 7 months of cost, and then annualizing that figure out. And the February, as I say, the February draw was $6,000.
But if I could help explain that, they take draws in advance of what they expect for claims payout for a certain period, 30 to 60 days, and they request that from Caitlin in advance, so they always have a certain amount of cash cushion in their account.
Yeah.
So this account, just for the record, is always lower. This account is always advance funding a few months of payments to the workman's comp firm, and they get to use that float. Don't ask me why, but that's the way it's always worked. But because the month that Caitlin did it last month happened to take the big draw for the quarter, it made that number look larger than it probably should have been for the quarter. And so February, in effect, didn't have the draw, so it averaged out between January and February
But that,
for this third quarter of the year.
yeah, but
So
if
it's
you,
probably a more realistic number.
just if I can, see if I can put a pin in it. Here's the question, I think. Last time we saw this schedule just a few days ago, it had your workers' comp claims estimated for this fiscal year coming in at $2,545,000.
And that was solely based on what they had taken out of our account for the year, which apparently included a big draw for this quarter. But that hadn't been noted on the report 10 days ago.
So that now, that same, that analogous number to the $2,545,000 is $2,165,000.
Yes.
So we're saying the delta's $400,000? And that, and what you're saying is, and this would be scary if this were the case, if this weren't the case, this is not because of a one-month change, this is because the 2.5 million was in error?
I don't say there was an error, I think because it was based, it's really, and there's no, what I would, there's a mathematical basis to it, not an actuarial basis to it. It is purely mathematics as to what we were paying out on a 7-month basis. We do not get projections from PMA as far as what we're going to pay out each month. And so we were just drawing a number based on what the actual had been.
And Paul, is it fair to say, and I'm not trying to belabor this, but because Caitlin annualized it based on that first month of the quarter, having the draw for the quarter, the annualized amount blew up more than it probably should have. Whereas if you'd say taken the drawouts for the first 6 months and doubled it, you would have seen a more probably logical number. And if I remember correctly, the report from a month and a half ago was a lower number based on the December results.
So she
this-
annualized a,
Annualized a number based on a 1-month payout that jacked that number up too high. And if you remember, we all were surprised when the number was high, but none of us asked why. And now we're finding out it's because she included the draw and annualized it, but that draw was too much. It implied that that was the payments for 1 month, but it wasn't. So it almost like took a 3-quarter number and assumed it was a number for only 7 months.
so it might be helpful if we understand the payment mechanism. So workers' comp, and Ms. Marilee, please correct me where I go wrong, if I'm understanding this correctly, there's two components. There's a quarterly component and a monthly component. And is that correct?
Well, there's draws they take every
There's a
few
draw
months, I
every
guess.
They take draws as needed.
They have to,
Okay, so now I'm confused.
okay, this is draw. So we have to give them $125,000. They draw down onto that till they get to like $20,000, and we have to give them another. They always have to keep that $125,000 there to draw. And I think what my understanding was Caitlin had taken 7 months and annualized it, and that February was a low month, meaning that we might have put money in the draw at the end of January, and because February is a short month, we might have 2 deposits in March, or a deposit, you know, we may have 2 this month, and then maybe less 1 next month. It just depends on how the bills come. It's not a monthly consistent number. I can't divide it up and say, this month is every month is gonna be this, or it's seasonal. It's like health insurance. Some month, we'll say like, January, February this year, we had good numbers, and the town had good numbers. It's a little lower than it's been running. It's the same kind of thing. You know kind of where you're gonna be for the year, but how it's gonna divvy up for the whole year, it can have fluctuations from month.
Well, 2 weeks ago when this was presented, we were kind of going to be at 2.5 million. Now we're kind of going to be at 2.1 million.
But a month ago, we were at 1.9 million, so it popped up $600,000 from one to the next. So if you take those 3 and average it, maybe that's a good guess. But this last month appears to be that it would just popped up too high.
Now,
But do we have a reason that it's going to pop down low now?
I think they took a bigger draw probably to cover a few months, because usually they don't do it every month, so.
Well, have we called and asked?
The draw depends
Sure.
on what they pay out. You have to replace the draw when it gets, they always want to have $100,000.
No, that part I get, but what you're trying to do is annualize a number that they're just pulling down when they pull it down. But,
No, I think what Paul's saying, hey, we're annualized the number. And then.
well, I understand, but I don't care who did the calculation, but we're making comments here that we can't annualize the number, but yet we have an annualized number in here, so.
Can we look at last year over the course of the 12 months and try to see if there's a seasonal time frame?
We-
And-
It was about $2 million last year.
What we could do, in answer to Selectman Stenick's comment, is we could distribute to the boards the draws over the last, to date, for all of last year, so you can see if there's any pattern, and as to when it hits.
Mr. Chairman?
Yes, Mr. Brockman?
Sounds like, to use a controversial term, that this is a difficult number to smooth. And in just a couple of days, we've had, regardless of why it happened, we're getting some various estimates because of this business with the draw, which does seem like a very tough way to ask us to make a budget decision.
The bills come in when, oh, I'm sorry. Often, legal bills will come in maybe a couple of months at a time. If you have a settlement, or if you have someone go in the hospital and have surgery, we can have, if someone has back surgery, we can have a $60,000 bill for that one person for surgery. And it's very hard, and it's not seasonal. It's whenever the person gets to that point in time, when they have the treatment, or they get their settlement, and it's whenever workers' comp gives it to them. I know that they're in the pipeline. I do not know when they're going to occur. And that's why you see the accrual for workers' comp, that's a real number. We don't know when the aspects of that number will hit. It's a very difficult number to budget. But last year, correct me if I'm wrong, it ran just around 2 million?
I'm sorry?
Last year, it ran around 2 million for the whole year?
Yes. A little less.
A little less. So really, it makes the number that you're putting in next year look more firm than I was saying last week when I spoke to you.
No, it actually makes the number look a lot less, because right now in the budget before us, it's got $1,550,000. So it seems like we're about 20 to 25% low on that number
No, from the number I gave you last week.
of 2.5 million.
No, I was talking about the projection for next year.
Okay, the 1.9 million.
Yeah.
Okay. Can we get that information? Thank you, Ms. Medley. Can
No
we get that information on the, I'd like to see what it's been over the past, if I can add on, for the past couple of years, and see what the monthly draw has been over the last couple of years. That'll tell us what the pattern is. It'll also tell us what the trend line is upwards, or whatever. I'm not comfortable with a $400,000 swing on this account in 1 month.
No.
We can email it
Yes.
tomorrow.
Oh, thank you. Okay. Mr. Tetro, back to you. Any other questions, comments on that item?
On that item, no. I've got kind of the same question on town medical, but be happy to defer to somebody else if they want to ask some questions in the meantime.
Anybody else have a question on workers' comp, or can we go to the town medical side? Okay, let's go to the town medical side. So this is based on the experience and an
These are based on the actuals through February 28th, and Aon's estimate through the conclusion of this year, and the estimates for fiscal '12. And the revenue estimates are based upon estimates contained within the budget.
And the backup to those estimates were given out.
Right.
Okay, so if I look at this, Mr. Chair, may I?
Yes, please.
if I look at, since we found the issue was in fiscal year 11, if I turn to those sheets, on town medical, we're seeing that on the revenue side, employee premiums are now listed at 766, and they were listed at 736. Is there a reason for the employee premiums being different?
It is as a result of the actuals through that period of time and annualizing them out. The
And-
actuals through February 28th, which is an updated number.
Okay, is there a reason we didn't know what the employee premiums for the year would be?
There have been in several departments, there have been some new hires, which impacts that, some vacancies filled.
Okay. And then as we move down to the expenses, 700,000. Looks like our expenses net out to about $100,000 less for the year.
And that's straight off the Aon's, factoring in the latest month of claims and rolling it forward.
And that puts our net profit loss up 125,000. $130,000. So that's all basically on the expense side with about 30 grand on the revenue side. Is that
Correct.
correct? All right, so those two things rolled together create a different beginning balance, and then our projections for the year have changed based on our experience on that.
And if I could just quickly, if you notice from past years, some of you remember, there's a little bit of a pattern that the spring tends to show a little better performance on that, because the Aon basically extrapolates a growth rate and assumes it continues the whole year, and it traditionally slows down in the spring. But the bigger increases are in the first part of the year, when their contracts kick in with doctors and stuff like that. So that this kind of slight improvement has been consistent the last few years as we've gone into the spring. Yeah, I mean, it's not
Okay,
a
well-
guarantee, but it seems to have been the pattern, as Dr. Teitel, I think, said a few weeks ago, on both sides.
Okay, and is that not to belabor the point, but on Board of Ed and Medical, are we going to find the same experience and same trends?
Yes.
Mr. Hiller, we're going to see the same on the Board of Ed side? Board of Ed Medical?
Perhaps
Both
Mr.
in-
McQueen could address the Board of Ed side.
And I don't mean to belabor that, just if that's the same trend and that's the same, that's fine, I don't mean to.
The claims experience is the same. The revenue number holds for this year, and the only modification to the revenue number for next year is because when we get an update, we go back and recalculate what the projected employee contributions will be based on the new claims totals for the next year. So you'll see that if the claims go down slightly, so will our revenue go down. But everything stays the same on revenue for this year.
Okay. Now, on the Board of Ed side, because you have teachers retiring, there's a wider fluctuation in terms of headcounts. This headcount, or these premiums, match up to the headcount that's in your current budget projection.
That's correct.
Okay, thank you.
Can I ask a follow-up on that? Why would next year's budgeted employees' premiums change in this projection? Because this projection should just be about expenses, not necessarily about revenue, which is already baked into the budget document that's before us.
It's the employee cost share contributions, not the operating budget revenue.
Okay, so it's basically their co-pays.
Correct.
That's not, okay.
Correct.
All right, so that would change based on the experience. But their actual contributions, as well as the Board of Ed's contributions to the account, do not change based on this experience, on the revenue side.
On the revenue side, for the current year, nothing changes. On the projection side, because it is based on our claims and the percentage increase that Aon projects our 39-week rate or our COBRA rate is going to go up. That's what our employee cost share contributions are based on. So we actually take that amount and we bump up the percentage cost share amount based on what Aon is projecting our rates are going to go up by. And that's all part of their presentation on what the claims experience is going to be for next year.
You're kind of losing me a little bit.
Sorry.
on because we have a current budget before us, right? And that budget assumes that, forget about the expense side, okay, because that's gonna, you're trying to hit a moving target, because that moves as you roll forward the experience, okay?
Right.
You froze it in time and said, hey, this is what we need to budget for next year,
Mm-hmm.
right? So you picked an expense number and said, this is gonna be the Board of Ed's expense, and then this is gonna be the employee's expense, right?
Based on,
Let's call it their premium. It's gonna
correct.
be their premium, it's gonna be
cost
our
share.
premium.
That's right, based on
Okay.
where Aon first came in on their
Yeah,
projections.
those numbers shouldn't change because those are numbers that are included in our budget.
The numbers that are included in the operating budget are not going to change. What is the variable would be the cost share on the employee side
On the
based on the rates.
copay.
On the copay only.
We're saying that, so it's just the copay.
That is
Everything else
correct.
is staying the same.
Everything
That's what
else
I wanna
stays the
know.
same. That's correct.
Okay. All right. Mr. Brockfeld, my apologies.
No, not a problem. Quick question for, I guess for Paul, but it could be for Bonnie, is there's a lot of moving parts here, and I'm noticing that in the projected through 12, for example, the two sheets going from the older one to the one we just got tonight, there's an expectation of an improvement on the medical and dental claims, obviously, for both town and Board of Ed. That seems right. And yet, I'm noticing that on the claims handling service and the access fees, those numbers stay exactly the same in both cases. So my only question is, do we pay these fees as a percentage of the claims, or is it
No.
a flat
It's a flat fee amount.
per employee? Per employee. Okay, thank you.
Sure. We'll go to Mr. Bolito.
Thank you, Mr. Chairman. Just to back it up a little bit and look more big picture, one of the most frustrating things about this whole exercise is that literally in 2 weeks, the picture has changed. Now, I understand the reasons that go into that, but how do we plan for this going forward? I mean, it just seems so volatile in terms of the numbers shifting up and down, particularly with the risk management account. Is there something that we ought to be doing to better plan so we can account for these wild swings and the,
I think the one
smooth
thing,
this better?
it is, that there have been some wild swings. I think the one thing that both the town and the Board of Education, on the 8-month picture, or really going back, and it doesn't just go back 8 months, it goes back many months beyond that. But if you look at it on a year-to-date basis, which is 8 months, and the projections, which are based on a longer period of time, we have had reasonably favorable trends, particularly in regards, in relation to what Aon projected is their regional or national trends. We have, particularly in January and February, we've beaten that trend. And I think that's the key thing.
But to answer Mr. Bolito's question, the real answer is, how do you plan for this? Or the real question is, how do you plan for this? And the volatility is so much, right? Now, in my mind, the answer to that is twofold. Number one, the volatility is so much because you're looking at it every month. It's like watching the stock market every day and trying to play the market every day, okay? And the second thing is, the apple has been cut so finely here to try to do this on a quote-unquote cash basis, on an annual basis, and the reserve has been so depleted that these fluctuations over a month or 2 months, if this was funded up to the level it should be, right, which should be the experience plus a certain percentage in order to have what they would refer to as the IBNR or whatever you'd want to call that, then this volatility in terms of the month-to-month blips, you wouldn't even pay attention to those because your cushion would just fluctuate within a reasonable band. The problem here is it's been cut so finely that you're playing on the cash basis as opposed to playing on within the cushion of your reserve. You see what I'm saying? And that's why we're sitting here with a $400,000 saying, oh, my God, what's happening?
Right.
As opposed to if you had the $5 million or $10 million reserve sitting down here that this would suggest you need.
Right.
You wouldn't be worried about the month-to-month.
So basically, because we're operating at a deficit and we need to address that, that's why we have the, you know,
You're
the
exposed to the
freaking out
market
about this, right?
you're
I
exposed to the
think if I
market
could add
volatility.
this, too. I think despite the fact that we're going to spend in excess of $33 million this year, and if you go forward to next year, in excess of $36 million are estimated, we are still pretty small groups, and a little bit of information or, a very good month can swing it dramatically. A very bad month can also, a couple of bad claims can swing it dramatically.
But it's on something so volatile, you shouldn't be managing it on a month-to-month basis based on those swings.
So really, the short answer is, the only way to really plan for this adequately is to get ourselves in a position where we're not running a deficit, which requires quite an investment on our part. It may take, years to get there. All right, thank you.
Questions, comments on this from other board members? And thank you for the updated schedule, by the way. I'd love the follow-up items on workers' comp. I think we need to go there. But thank you for the update on the schedules. I appreciate the speed with which you guys turned it around.
I would say this, obviously, I don't think, other than seeing what other draws may come on the workers' comp, or may have come in March or in the next 10 days, there's not much other information that we're going to be able to give you before next Thursday night, either on the town side or the Board of Education.
We want the trend lines on the workers' comp.
Yeah.
Yeah. Mr. Flato.
I guess just trying to think of some big picture thoughts on this. And if I look back, just to summarize it, there were three factors over the last 2 or 3 years that affected this fund negatively. One is the draws down on the health insurance reserve. 2 is the workman's comp side escalating higher. And then the third, which we didn't really talk much about the last few weeks, but if you remember, it really did affect this fund, was when we transferred the $2 or $3 million from the OPEB part of this fund, which we used to keep in this fund, and transferred that to the OPEB trust a year and a half ago. That dropped the cash in this fund by over $2 million that year. Those three things really caused this worse picture. My own personal thought is that, it's one that we have to fix over time. It's not going to be a quick, easy thing, but it would seem to me we should try to create a goal that from the projection this year to the projection next year, that we shouldn't, in this coming budget year, see it worsen. And I looked at the difference. There's literally about $1.3 million worsening based on these projections from year to year. Even though this year's bad, it gets even worse next year. So personally, my thought would be to try to at least seek to stabilize and stop the worsening. And we've talked about a few sources of funds, depending on what happens the last few weeks. There's the 450, there's the 2 items in the operating account that we may take out and put in capital. So those might help these funds if we do those actions. I think the only other idea that I can think of is that, some of us have talked a little about this possibility of new revenues next year, and I know I've said, well, we should try to use those if we get them to keep any mill rate increase from escalating. It would seem to me if those were segregated and used toward this fund, that would avoid us necessitating a mill rate change to help this fund. So perhaps one thing to consider is that if we do get, any conveyance increase or whatever it might be, to agree to not use it for spending, but to use it to help this fund and thus not have a mill impact from this fund. And it's just a kind of big picture thought, off the top of my head. But I'm not sure where else, we can find money easily at this point.
So, Mr. Flato, thank you for the thoughts. If you said your goal was no worse than where we are, let's say June 30th, 2011, for sake of argument, we're at $4.4 million is the latest projection.
In cash.
Right.
Which is a deficiency in the accrual of whatever it is, 4 or 5 million.
And then it's projected to go down to $3.1 million if this budget were approved. So that means, to your point, you're looking for $1.3 million. Now, of that $1.3 million, there may be 650,000 through the 450 and then the two items for 100 each, as I recall, correct? So then you're halfway
Potentially.
to your goal, potentially, depending on what happens. I'd love, Dr. Tittle, if you have any information to share with us from the Board of Education. And then you'd be looking for another 650,000.
And just throughout the thought of whether we seek to get it right away or see if this year ends up in a really good picture or see if there's any new revenues. You know, there's a few different ways you can look at it. It's a tough decision.
Yeah. Dr. Tittle, so does anyone, do you mind if I go to Dr. Tittle for a second? And Dr. Tittle on the 450.
Yeah, we're putting that on the agenda for the 29th. I'm going to recommend the board approve that. I've drafted a resolution I'll share with Mr. Mottola. The agenda will be out Thursday. So that's as far as I can take it at this point. I see no downside to the board taking that action, but it's ultimately up to them. I will recommend it. I think it's a good idea. And we're also preparing a document that will go out, if it hasn't gone out already, from the Tech Department and the Board of Ed that will, I hope, sway your consciousness about taking the switches and considering them infrastructure as opposed to considering them technology. I know you all can't be swayed that way, but that's a critical turn in this road that I know some of you were thinking about. So we've prepared a document with some diagrams that we'll share with everybody before this is done. So those are things we're working on this to try to advance this ball down the field.
Thank you, Dr. Tittle. We appreciate it.
Thank you.
Yes, please.
I'd like to personally thank Dr. Tittle for providing his refereeing service to the Jennings PTA parent basketball game on Sunday.
Okay.
And I have to say, you did a fantastic job, and you're a great referee, and we had a wonderful time. Thank you very much.
Thank you. I officiated for 23 years. I think it's the first time anyone has ever actually complimented me.
And who beat you up during the game, the faculty or the parents?
Thank you.
I was going to say, bottom line is Mr. Kiley didn't fall out.
Yes.
He didn't really play that much, so I'm assuming he got a little tired. I will say that the parents turned it on in the fourth quarter and took the teachers to task, which led me to believe that the parents were in better condition than the staff. So we'll be working with our PE department to do something about that before next year's game.
But Mr. Kiley was firmly planted on the bench? Is that
He did appear to disappear at crunch time, so I don't know.
I know I'm digressing, but I challenged Dr. Tittle to watch the Roger Ludlow Middle School faculty because, whoa, they have some players.
All right. Any other questions, comments? Mr. Brockfeld?
If you think it's the right time to, well, I think my definition is, I wanted to talk a bit about this $450,000 idea, because, and it was my motion, with much help from the table, to put it off till April 5th, and I'm happy we did. I'm very uncomfortable with the idea, very uncomfortable, and not in any way, shape, or form related to whether or not it should be the switches are a bonded issue or not. What I feel, and I think also Mr. Walsh, you know, in all good faith, tried to come up with a good idea of how to help to ameliorate this problem we have. But the reality is that what we're talking about doing is functionally exactly the same thing as if we just decided to issue a $450,000 bond, for example, a general obligation bond, and simply put that money into the internal service fund. And I could walk us through that, but it's precisely the same thing. And I can't imagine that if I asked anybody on this board if they wanted to raise their hand and issue a bond to correct this problem that we've created, we meaning the town. It's not a disaster or anything like that, you know, a natural disaster. I don't think anybody would be supporting that. And the mechanics of it are literally precisely the same thing. And I think it's a terrible precedent, to be perfectly honest.
Can I just have a quick, I think we could talk about this all night, and I think there are different opinions on different members of the boards, and, you know, your board did take a vote, it passed, and I think to reopen that discussion, why not let the Board of Ed, you know.
We didn't vote on the $450,000.
No, you voted on
voted
it coming
request
back and
and ask the Board of Ed.
Absolutely.
As part of your motion, so I just think I mean, I'm just saying we're going to be here all night if we start talking about this one item
But if we
again.
don't talk about it now, we don't talk about it again until April 5th.
No, you talk about it on March 31st.
Or on March 31st.
my personal opinion.
But on March 31st, if we haven't discussed it now or on March 31st, right, then we're going to be asked to take a vote on whether or not to repair $450,000 through this vehicle, which on the 29th, we're going to hear back from the Board of Ed with their opinion on it. So if we don't philosophically discuss whether or not this is an appropriate thing for us to do, I don't know when we're going to
I don't
be
know
able to
that
talk
we're going to
about it.
reach a conclusion on whether it's philosophically. I think there's just differences of opinion on it. And we got to see where the votes take us. I don't know what we're going to gain by rehashing the discussion once again.
Not rehashing. I don't think we addressed this particular point.
We did.
I don't think anybody
we
really.
discussed it.
I don't think anybody at the
55
table really.
minutes.
Yeah.
No, I know we spent, I'd say, 98% of the time about whether or not it was a bondable item. I don't think.
No, I don't. I think we
Okay.
talked about it.
I did.
Yeah. I mean, I'm happy, it's an open discussion, so we can have the discussion once again. I don't have a problem with that. But I disagree with the commentary that we didn't discuss it the other night.
I don't mean that in a bad fashion.
I'm-
I'm just
no,
saying,
no, I know.
I thought we spent the most of the time asking questions of our technology expert from the Board of Ed as to whether or not it was something we normally would bond or not bond.
And if it helps, oh, I'm sorry, Rob.
Add on this point, might clarify. I know that personally, I had raised the issue about, philosophically, whether this was a good precedent or not, and I hadn't made up my mind about the overall, whether I'm going to vote in favor of it or not, but I do think that the initial discussion was about, in tying in a capital item with an operational item, is that something that's going to set a precedent, or are we looking at it as a one-off in order to correct a short-term problem? Kind of to stretch it, it's similar to what we did with the paving a couple of years ago, where we philosophically were not crazy about paving or bonding paving, but to get us over a short-term hump, we made an exception to that policy. So,
But
go ahead.
No, I appreciate it. It's a good discussion. The only difference I would bring up is that in the case of the paving, we bonded for paving. Here,
That's a fair point.
we're coming
Fair
up
point.
with a creative way to make us feel good that we're bonding the switch, when that's not what we're doing. We could pick anything out of the budget and say we'd like to bond it and then put
Right.
the money in the Internal Service Fund. The point is that item was in the operating budget for a reason. That's what it was expected to be.
I don't
not a capital
disagree
item.
with you, yeah.
And Mr. Walsh, in all good faith, thought he saw a way to take $450,000 and put it in the Internal Service Fund, which is something we all want to do.
Right.
But I just don't, look, I'm the last person around here who wants to raise taxes. I think it's a lot more straightforward and honest to simply say this is a cost we need to pay for, and if we can't find other cuts in the budget, then we should be willing to ask the townspeople to pay for it, rather than to put it off for 10 years, which is, that's literally what we're doing. I just want to make sure everybody
Right.
understands that
I guess
point.
the point that kind of where I was coming from with it is, in being creative, do we set a precedent? Are we looking at fixing a short-term problem and essentially it being a one-off? Or are we creating a precedent where, next year if there's a shortfall on some account, do we do this again? And that's where the road I don't think we want to go down. In terms of this particular year, this particular issue, I'm still up in the air about it personally. Philosophically, I do have some issues with it, but I also see that there is a short-term need that is crying out for some sort of solution. This is a vehicle by which we can perhaps achieve a short-term solution. So it's a tricky one. I don't know if it's a black and white answer. There's a lot of gray there, but I do agree that if we're looking at this as a one-off, maybe it's a little more palatable.
Mr. Walsh?
This idea that I had, I guess you could call it a one-off, you can call it whatever you want to call it, but we're in an extremely difficult position in this year's budget. And we're in an extremely difficult position in this internal service fund. And you could say that it's a way of bonding the internal service. I guess that's one way of interpreting it. But in the end, what's really happening is we're bonding switches. And I think we are bonding switches. I think there'll probably be more evidence from what Dr. Title says to show, might help you justify that, or in your own head, or become comfortable with the fact that this might not be considered traditionally technology, like PCs or something else like that, but might be more infrastructure to make you feel comfortable. But the bottom line is that bonding money, unless Mr. Hiller tells me something different, is that bonding money is going to be used to pay invoices for switches. That's what it's going to be. Now, is it you know, I call it a creative way of finding something else to help another problem. Yeah, it definitely is. And that's what I was looking for, to be quite honest with you. And I'll be honest with what my intent was and what I went in to do. It's to try to find a way to solve this issue. And I agree with Mr. Bolito. I'm not looking to do this and then have to do this again next year. Both problems have to be solved at the same time. We've got to try to replenish this fund and also figure out a way for this not to happen again. And, you know, I think we've learned through this process some of the ways we got in this position and some of the ways from both town and Board of Ed side, ways not to have it happen again. So my problem is that, and the reason I spent some time looking at it and trying to find this solution was the only other way to do this. The only other way to do this is there's two ways we all know. Cut expenses, so cut some programs, lay some people off, do something like that, or to jack prices, jack taxes up, which I don't think, from what I'm hearing and reading in the paper, people really want in this current economy. So those are the only other ways. My creative solution or idea takes care of the issue without doing either one of those. At least not the whole amount, but $450,000 worth. Because otherwise, we're going to have to start out from zero again to try to get up to what the first selectman's proposing is raise about $1.4, $1.3 million. Start from zero and try to get up there. Well, we already approved 200,000, so 200 out of the 650 we've approved to try to get up there. And it's going to be extremely difficult to do that. So I'm not proposing this as a way that we go forward for a substantial amount of time, or even to do it again next year. But in this particular difficult year, I think if you want to call it a one-off, was my idea.
So, and I'm only speaking to you, Mr. Walsh, because you're presenting it. So are you saying that next year, for example, the first selectman's proposing that we try to repair this year's deficit, right, to get back to 4.3 million? And I think we all want to get back up to 5 million or more in order to make the rating agencies happy with us. So if we're sitting here next year at this time, and this account has 4.3 million in it, and we're having just as difficult a budget year, would you go in search of another item to throw in the capital budget and do it again?
I'd have a hard time doing that 2 years in a row, but I guess I'd have to look at what did the Board of Ed side do, what did the town side do in properly funding their reserves, or eating into the reserves, to see whether we had tried to correct the problem. I don't think I could ever correct an issue where we have some horrendous year, some completely horrendous year where the medical numbers come in 80% above what we thought they were going to come. And then we'd have to come to do something else. I can't make that prediction. But I think we've gone a long way, and this board has had a lot of discussion in regards to how not to get here again and how to properly fund these reserves and maybe not dip in and try to use them. And I think a lot of progress has been made, I think.
And I want to turn it over to Mr. DeWitt. There is in process, and I don't know with Mr. Fleto's decision how this will be impacted, but there is in process a dialogue between the school and the town regarding management of this fund on a go-forward situation to ensure that situations like this don't happen in the future, to the best, Mr. Walsh, to the best of your control, to the point being, if the estimates from the experts are off by some horrendous amount and you followed the expert advice, then this problem could naturally occur again. But it wouldn't be from a utilization of the reserve for other reasons. Now, it's too early to say how that process is going to work out, and certainly the announcement today will play into it, but there is, at least I know from Dr. Title's perspective, I don't want to speak for you, sir, but you've mentioned many times that you want to roll up your sleeves right after this is done and come to an agreement. So I want to go to Mr. DeWitt, and then I'll come to Mr. Tetra.
Thank you, Mr. Chairman. So, in principle, I do agree with Mr. Brockfeld, but to Mr. Walsh's point, if we're going to do this for 450, I also forwarded some information to our board and to the selectmen for another $425,000 to add on top of that. Are you in favor of including that to make that number $875,000?
Well, speaking for myself, I saw the list, and we have not had a chance to meet and talk about it. I think we will at our next meeting.
I didn't know if it was an agenda item or not, so.
Well, I don't set the agenda, the first selectman does, so I guess I'll let him address that. I mean, from my own standpoint, I guess I was looking for larger items that met, but I understand that, I didn't understand until recently that you had a policy of things over $50,000. I thought from hearing the first selectman speak that it was $100,000, and that's why I was looking for, actually $100,000 items that would last more than the bond, 10 years. So that's what I was thinking.
I think our policy is written at 10, I think we iterated, I forget, Mr. Kyler, what the last version is, but as you had stated in this maybe 1 year, where we take that number to 50,000, just, we're not getting there over 100,000, I understand that 450 got us there, but if you go to 50, you're tacking on another $425,000 that, again, I found.
And I guess it's something to explore, considering that would still keep the CIP below what the first selectman originally proposed. So I guess it's something to look at.
Would that, including the other items that are being proposed or being reviewed by the TFC? That was the question that I had. You'd have to not only factor in the items that were passed last week, you'd have to factor in all the other items that are coming back and see how that compared.
Well, it definitely would be, my number was 4 million, so it definitely would either way be lower than that, but the average of the CIP the last 10 years has been between, 3.5 and 4.5, or 3 to 4.5? So I know the boards have not wanted to see that number increasing, but 2 million is pretty low.
I would have to believe, just the numbers I'm thinking off the top of my head, that we did not seem to be going forward with the Ludlow Middle School siting issue, which was $250,000. We had saved money of $200,000 on the bridge in Southport.
Yeah, but you had put in, let's work the math for a second. Yeah, you'd put in 600,000, so the total bonded amount that's gone forward is 2.6 million, right? So then you have 2.6 million, then if this 450 goes through, then you're at 3, and then you have several other $100,000 items that are being moved. So you're getting pretty darn close to that $4 million
That's a good
cap.
point. We'd have to add it all up.
Yeah, and my apologies, Mr. Tetro, you were
No,
next.
that was, Mr. Chair, that was my question exactly. We've got kind of 4 pockets here, I think.
That's
We've
right.
got, pocket number 1 is what we've approved. Pocket number 2 is what's going to come back to us that hasn't been unapproved. Pocket number 3 is this 450, 650 kind of number. And pocket number 4 is if we take Mr. DeWitt's memo and look at another 425,000. And I guess I was looking for what the total of that whole pool is.
Right.
And given our capital plan had 3 million on it going forward, that's potentially $1 million or so over what that was.
The one thing, it's a fair point, the one thing the capital plan did have in it as well.
Not to mention the 250 from the switch. Or 450
There was
from
$1
the
million
switch.
for the roof. There was $1 million for the roof that got cut back.
back.
That was the 4 million was, because we tied it out at one point, the capital plan had 4 million in if you included the $1 million for the roof, so you were within that.
It would, for those of us with a little bit more gray hair,
Yeah.
if we could put all that in writing somewhere before.
No,
for
you
next
just
week,
had a little more gray hair. Quickly catching up.
that would be great.
Yep. And that I think is a very valid point as regards Mr. DeWitt's comments.
Just one comment.
Wait just a second.
Mr. Flynn?
Yep.
Just, Mr. Chair?
Yeah.
Just the part about getting that in writing in those 4 buckets, or somehow delineating
Yeah.
what's still to come. So as we're voting on this, or whatever votes we take on next Thursday, we have a full view on this.
Agreed. Mr. Brown?
Some combination of however we go about this would affect debt service, though, correct?
Correct.
So can we see how, depending on how we parse this, how would it affect debt service?
It's already, to that point, it's already been factored into the debt plans as long as you stay below the $4 million level, because the
it would
$4
be a year
million
later.
level was factored into the long-term debt service.
Okay.
Right.
But whatever we do with CIP would be a
The
year
million
later,
plus the
actually.
million in the-
There wouldn't be any payments in this coming fiscal year from the CIP we approved this spring.
It's in there.
It's a year later.
Okay.
We'll check. Mr. Flanagan?
I was just going to make a quick comment, and the Four Pockets is a good analogy, Mike. One of the hard things about having this kind of meeting, even though I think it's a good idea, is that, we can't really say how we're going to vote in a
Yeah.
meeting, and each board has to vote separately, and we're two boards out of the four boards that have, voting rights, given that the Board of Ed has certain things they have the authority to do once we
Yep.
allocate what we give them. And even in this 450 case, we're asking them for some more input. But I think it's a hard thing to predict how that plays out. I think to
Agree.
try to seek a final determination in a meeting like this, which is not a voting meeting, kind of preempts people's voting prerogatives. So I think we talk about it, but I'm not sure we can resolve these things.
Oh, I agree with you. And my intent here is, our intent for these meetings in the past have never been to resolve it, but to really let each other know how we're thinking, because I think that's going to, hopefully what happens is dialogue happens and thoughtful consideration of the documents happen in the next week, so that when we come together in a week, no one's blindsided and you're not having these debates during those. At least you know where board members
It's hard because there are
stand.
50 RTM members, and,
Sure.
it's a hard process because we got to explain to other boards, too.
Yeah. I'm going to go to Mr. DeWitt, and then I'll go to Mr. Walsh.
Just to the first selectman's point, when we're talking a lot about the internal service fund, is it our intention to give the Board of Ed a target?
We
Or
don't know.
I guess that's something I like to discuss, because we've been kibitzing about it a little bit, Board of Ed and members of the Board of Ed, and I think there's some frustration in, somebody said a number was good, somebody said a number was bad, and now we're at a point where we're slowly trying to chip away at 1.969 million or whatever it is, but we really don't have anything formal that says, or we haven't put anything formally out to the Board of Ed that says, hey, by the way, here's $1.5 million we'd like you to reduce the internal service fund.
We actually, well, you wouldn't want them to reduce it, but...
No, you and I, what I mean.
Yeah. We actually have put out a formal request for them that, pending this $450,000 item, would like them to respond to the fact that the only reason we would consider bonding it and yet leave and not cut their budget by 450 would be that they would guarantee
Yeah.
that it would
No,
go towards so that's at least 450
And I'm there
that
with
we
you.
have targeted.
I'm there
Now,
with
the
you.
rest of it, to your point,
Right.
is not something we've deliberated.
Right, so that's kind of my point. We've taken that first chunk, and I applaud the board for putting on their agenda and discussing it as an item this week. But we're going to be in a situation very soon, much to Mr. Tetra's point, we'll be voting on this and having some, thoughts that we're reducing that number by a larger amount. And I'm wondering if we could formally convey to the Board of Ed, informally convey it, how we kind of put a bow around it for the
Okay.
rest of the decrease or increase, if you will.
Can't. It wouldn't be right, in my opinion, well, I suppose you could do whatever you want, but I think to kind of preempt the budgetary process in the charter by telling boards how you're going to vote in advance of the Board of Selectmen vote is not a proper way to go.
No, but that's not my intention, but, I think everyone here knows why we're talking about what we're talking about reducing, and it's just kind of fun talk unless we actually reduce that one item, or I keep saying reduce, but, increase that one item.
Okay. Mr. Walsh?
I guess as a talking point, in order for myself to be able to deliberate, I understand, I hear the first selectman saying that he wants to get to the 4.4, but I guess the question I have, and I don't know whether the first selectman or the fiscal officer can talk about it, is that the target we should be trying to get into the service fund, or should we be trying to at least get back up to the 5.3 that we got criticized on? And is 4.4 going to be enough, or are we going to be hit with a negative outlook or another criticism for even going down further below this? And I take into account, I guess, the first selectman's point about taking $2 million out of this and putting it towards the OPEB trust, which I'm sure they like to have saw this, they like seeing that money in that account, and now they're like, where did it go? Because the numbers changed dramatically. So I don't know whether you can all discuss this from speaking with the rating agencies, but I'm trying to figure out what number we should be getting to in this internal service fund. And I hear the first selectman saying 4.4, but is that going to be enough? Or should we be actually trying to hit a target higher than that?
Let me just start, Paul, and then if that's okay. I mean, keep in mind, the rating agency, number one, we don't go to all of them this summer because it's just bands, so they tend not to do the full review in the band year. But they'll only see the projected audit numbers for this June, which won't be final, so they won't see the year-out numbers. They don't get any information for next budget year or what's going to happen next budget year. They're not going to want to see that. The numbers this coming June don't appear to be much different in total and deficiency as last June, but one agency had an issue with it. I think what we have to do, and I don't know the exact answer, Jim, but certainly we're going to point a lot to the OPEB where it's gone up a lot from when they saw it last time and say, hey, we have an area here now where our reserves are increasing significantly. I would say we certainly have to show them we're focused on it, is probably my gut. I don't think they're expecting us to change it overnight, but I think they certainly, want to hear a game plan. And then, Paul, I don't know, you could add on anything you think.
I think one of the things that we've tried to emphasize when we've gone to the rating agencies, and we only intend at this time to go to one rating agency. As I've said before, we're only selling bond anticipation notes this year. We only intend to go to one rating agency. And not that we're trying to avoid this, but I think one of the things, I think the dialogue, the very what I'll term mature dialogue that you're having here right now indicates that the mutual concern of not only the Board of Selectmen, Board of Finance, and the realization, both at the Board of Education level, at the RTM level, that we've got a problem. And we're consciously trying to address it, and I think that's one key thing. One of the things that has concerned me, and I know the first selectman in the past, is that it's just one agency that has highlighted this. The others haven't even mentioned it in the reports. For example, we intend to go to Standard & Poor's this summer, period. That's it. First off, to go to these agencies cost us about $10,000 each. So, why spend in it? We're not going to get, for an extra $20,000, we're not going to get that much better a rate, any better a rate on the notes we're going to sell.
Which is what we've normally done with Ben. It's nothing new, it's just that's what
Yeah, and so we've been there before. And there's other towns, most notably Westport, that has only gone to one agency for selling long-term bonds.
But Paul, what you're doing is you're saying, I don't like the way this teacher grades, so I'm not going to take their test. I'm going to take
No,
the
that's
test
not
of the
it,
teacher over here, which doesn't
No,
solve the problem.
he's just saying
of the fund.
coincidentally, this is the firm we use for bands. We've used the same rating agency for bands for the last 7 years. There's nothing different we're doing.
No.
It just
What we're
happens to be-
doing,
I understand.
And
but
they could focus on this, given the reports this summer, and say, hey,
No, I understand, but what it amounts to is, hey, we don't have to worry about it for a year because we're not going to be graded for a year, right? I mean, that's what this amounts to. At the end of the day, it's saying that, we're not going to go to this teacher this
Just
year
give me the
because we
facts,
don't
ma'am.
have to, right? We don't have an example, we don't have an exam for 2 years, so we got 2 years to fix it from this particular teacher. I mean, that's, in a nutshell, that's what it's saying.
Yeah, but I think that's not different than what we would have said 2 years ago.
I'm not saying
Because
it's
2 years ago,
different.
we only went to S&P when we only sold notes.
I'm not saying it's different, but it doesn't get to the point that you have whether they're going to look at it or not, we have a problem in the account. And, as we said earlier, we're slicing the apple too thin. Mr. Walsh, to your question, the 4.3, 4.4, here's a thought. I don't know whether this works or not. You might have upside in revenues coming from the state. Perhaps, to the first selectman's earlier comments, some of those revenues have to be designated for this fund. The other item is, essentially you've got two reserve accounts. You've got the general reserve account, you've got the internal service fund reserve account. Both, in essence, are savings accounts for the town, one designated and not undesignated, and one completely designated toward the insurance fund. Opportunity, I don't know, but what could be interesting is, are we going to be over-deliver on the general service fund again, be above the 5%, and then be able to do a transfer into the internal service fund of some of that overage to cover some of the shortfall in the internal service fund. All that does is prop up the balance, okay? We can have a debate whether that's philosophically correct or anything else. The next item is actually going forward on an annual basis to make sure that you're funding the internal service fund at the right amount so that this doesn't happen again. It's just a thought process. I'm not advocating it one way or another. I haven't thought it through. But it's an option in order to prop up the balance. Mr. Tetra.
Mr. Chair, if I...
Wait a second. Mr. Tetra, I think I had Mr. Polito first.
No problem.
My apologies.
Thank you. It's on the specific point because one of the issues here that we've been dealing with all along is the fact that Moody's is the one that's red flagged this. And I guess the question that we have to look at is Moody's an outlier, or are they indicative of a trend where the other two rating agencies are going to start saying the same thing that Moody's is saying? So it's a cause for concern going forward, because if Moody's is just a stick in the mud and, who cares what they say, that gives you one philosophy about how urgent this situation is and how urgently it needs to be rectified. But if what Moody's is saying is something that the other two agencies may follow suit in the near future, that puts us in a different philosophical state about how urgently we need to deal with this.
That possibility always exists, but I think the point is, Moody's had mentioned it 3 years ago. And then, there wasn't any, there wasn't even any improvement, it got worse in a 2-year period of time, and that's when she really came down on us. I think the one thing I would say as far as the other agencies are concerned, sometimes they go to what I'll call the flavor of the year, what's their favorite thing. Right now, for example, I know that S&P is looking hard at OPEB trusts, and they've been going at other communities because of not establishing the trust, not funding the trust, or all these things right now. We're going to be looking quite good as far as Standard & Poor's is concerned, because we've done, in a sense, all of the above that they're looking for. We've established the trust, we're funding the trust, and we have a pattern to fully meet the ARC. We have a requirement to fully meet the ARC under the ordinances that was passed by the RTM, and that will happen in the following fiscal year. So these are the things that they change, and it also, one of the concerns that we've had over time, there's been, in all of the agencies, personnel changes. And it's a continuing basis. And the woman who was at Moody's before has left, and left, frankly, about 30 days after we were there. And so we're going to be not looking at new faces, but faces that at least I'm familiar with, and can have a dialogue.
Thank you.
Mr. Tetra.
Thank you, Mr. Chair. I think in listening to your comments and some of the points you mentioned and steps we can take, I think they're all worthy of both consideration and serious thought. It appears to me from a timing standpoint, most of those are what I'll call June 30th steps,
right.
based on how we finish the year on June 30th, based on if the state revenue that we might get stays, or the additional revenue we might get based on the governor's budget stays in the governor's budget, and we won't know that till later. So we have an issue with how we vote next week.
I agree.
Given the first selectman stated that his goal was to kind of make up the 1.3 and get us back to the beginning balance, if you will, my question is, what's the game plan for doing it? What are your thoughts at this point? Where does that 1.3 come from?
Well, I threw out the idea of new revenue.
That's the new revenue that we won't know about till June 30th.
I don't have a real answer yet, Mike. We're all voting on it. I have to think through till next week, my own approach. Not sure. I mean,
Okay,
it's just a goal that I think is worth discussing, but how we get there, I don't have the magic wand on that one yet.
No magic wand. I mean, at some point, this is your budget, and we're just trying to, I guess I'm looking for some guidance or some thoughts on things that we can be thinking about so that we're not surprised on next Wednesday when we see what you voted on Tuesday, and so we have more than 24 hours to think about it.
I think the only thing I could add, I suppose, I'm sorry.
No, that's all. I'm just trying to get a head start on thinking about what you're going to propose. That's all.
As one selectman, it certainly would be hard for me to advocate raising the mill rate beyond what we've done, but to find that kind of magnitude and where to find it, that's a tough one, whether we can do that much or not. just don't know yet.
I mean, we've already got in the budget that came to us, or might come to us, your initial recommendations have a $1.6 million cut to the Board of Ed. You've talked about how lean the town side is, and if we don't want to adjust the mill rate, other than punting this one to Mr. Walsh for another miracle, is there any other way, anything we can be thinking about, or can you point us in any directions that we should be looking at this to?
I mean, there's a few other one-shots one can consider. Paul and I talked about a lien sale next year, but we didn't build that into the budget. Perhaps there's some things like that we can look at that wouldn't be that painful. But there's not that many steps that I can think of besides some more tough decisions.
Okay, so from a standpoint of looking 2 years down the road, if we're saying, hey, if we don't have to get all the way there this year, in 2 years, state revenue would be one. Revamping how this whole thing is structured, Mr. Chair, if I understood you, would be another?
I don't know that that would improve the balance. It would just assure that the situation didn't recur. It wouldn't necessarily fix the current situation. And by the way, Mr. Tetra, to your point, when I enumerated those quote-unquote options, those would be options, in my opinion, that would be at least worthy of discussion over and above getting us back to the 4.4. In other words, not worsening the situation. So it would be, to your point, and I think where you're going, you got to deal with the 1.3 now, right?
Mm-hmm.
And then any upside that you get from those items that we don't know about now, there should be a game plan as to whether you use those to at least get back to the 5.3. And by the way, they weren't happy with the 5.3.
Yeah.
So that's to your point. So I didn't mean to interrupt, but you and I are on the same page.
Yep, that's all. I was just looking for some, and I think you've enumerated some, and I
I
think
did-
the first selectman had some other ideas in addition, not for this year, not for this week necessarily, but looking at next year, what we might be able to do to strengthen this.
I did throw the idea out last month, which is a big idea, but it sounds like there's somewhat reluctance about it, and that is to take the workman's comp and do what the other 50% of the communities do and not call it a risk fund item, and that solves the problem overnight. But I sense a reluctance from others to do that. I personally feel totally comfortable with that because many other AAA communities do it. But that's a choice for all of us, you know.
Mr. Flynn and Ms. Tetro, can I have a follow-up to Mr. Tetro's question?
Sure.
These other revenue sources.
Do I get a vote?
These other revenue sources that we're talking about, has anybody done a calculation based on the governor's plan of raising the sales tax and what our community would get back, and also in regards to the conveyance tax, what that number's looking like?
There was a handout in
Oh, maybe
our
I missed that
earlier
handout.
packet.
Handout
Okay.
early in our first.
I'll go
yes.
back then over my handout.
Mr. Flato, is it just $2 to $3 million might be
Correct.
that
Yeah.
ballpark, if that helps.
Thank you. I'll go back over my handouts.
Yeah.
You know, it's just,
1,000 of them, I'll go through them.
and then we're rolling the dice on how much of that actually, actually, I think it was a purple handout while you're looking.
It is
I think.
purple.
I might have it.
Not chartreuse.
Chartreuse. Yes. Yeah, it wasn't the
Oh, yeah,
$2 to $3 million range.
It was in that
absolutely.
range, there's no doubt.
Very subject, obviously.
Yeah. Any other, let's continue to move this on. We are past our witching hour here.
Yeah,
It was more than that, I thought.
Budget to the governor's variance?
Was it 1.2?
Yeah, Mr. Wall. There it is, 1.24.
Good, thank you. I thought it was more.
Thank you for color coding it, I found it.
I think
thought it was two.
that's not including the conveyance, I think.
Ah,
Oh, that's the
that's right.
difference. Yeah,
That's,
yeah, the
okay. I knew it was higher. Okay. Thank you. Thank you, Mr. Flato. Other question?
No, conveyance tax is in here, $818.
What do you have?
Governor's budget
Is it 1.2?
just over 2, and our budget.
1.244. There have been, and we can update this, there have been a few updates, not major, from both OPM
Well, we don't have them in the
and,
budget, so let's leave it.
and
to the second.
CCM on that, which we can update next week. They're not significant.
Any other questions, comments from board members on the budget as a whole or on the items concerning them the most?
Mr. Chair, just
Anyone?
one
Yeah.
clarification on this.
Yeah.
I think that not included in this version of the sheet, the year 2, there's a property tax on boats, and that was a significant number also.
Thank you, Mr. Tetra. Maybe that was.
That is, there's some bigger changes in the fiscal 13.
What other questions, comments do we have? Anybody? Anything?
Are we going to open up do you want to open up a full budget discussion?
Yes.
On both sides of the budget at 11 o'clock?
I mean, that's what we're doing. Do it. That's what we're here for. Anybody have any other comments on this budget in its totality? Thoughts you want for consideration?
Just, there have been a number of adjustments. I think Ms. Gardner's been keeping track of those, including the revenue items for the Parks and Rec, that type of thing. Are we going to get that spreadsheet, some summary, something that shows us the pluses and minuses before
We'll have
Thursday
the Board of
night?
Selectmen vote. They may take some of those adjustments, and then I'll,
But the ones, Linda, that are, I would call it financial administrative things.
Right, right, yeah,
You
I-
should get that list out.
right.
You know, it's the non-policy issues of do we want to adjust this or that.
Things like the police
Corrections
department,
and
the
things
capital
that you
items in the
mentioned
police
in the
department that
course
were
of
double
your
counted.
Talks, I have those. I'll email them to you tomorrow.
Is there a simple kind of spreadsheet thing that we can get for
All
that? so
done,
that-
I'll email it to you tomorrow.
Mr. Chair, that just helps us define
Yeah.
where we are.
I'll just caution you, the Board of Selectmen may take some of those in their vote.
Yeah.
under
When is the Board of Selectmen vote, if I may?
Next Tuesday at 4:30.
4:30
Okay,
on
and
the
then
29th.
So you will have a
ours
day
is-
day and a half to absorb our momentous
All right.
discussion.
So we will get an updated schedules. Linda, I have the schedules that you prepared for me related to
It is
by
a public
department,
executive
by
session,
revenue.
just for the record.
Yeah, will you get that to me with the Board of Selectmen's actions by Wednesday
We should
morning?
be able to email it Wednesday.
Can you do that, so we'll have it?
Yeah.
For exactly?
You know what, I'm going to be doing it in Munis first, and then I have to go into your Excel and update it.
Yeah, if you
So
could do
it'll take
that.
a little while, but, 'cause
Yeah,
I
we
gotta do
need
Munis
that
first.
for our conversation. Is the tenor of the boards, I just want to ask the question, the fact that the first priority has to be to shore up the internal service fund to at least this $1.3 million? Is that, am I reading this correctly?
For a voice vote, yes, from
Yeah.
here.
So I would assume that actions taken on reductions in other areas, the first way to do this would be to put those reductions towards increasing the internal service fund and not impacting the tax rate. Is that correct? I'm not asking for a vote because we can't vote, but I'm just stating the obvious.
That seems like a reasonable priority.
Right. So we have at least, if we took the first selectman's lead here, we have at least a $1.3 million to make up out of cost reductions from other areas to get to the first selectman's stated goal of quote-unquote do no harm and not bring this down any further than it would be as of July 1st of this year. And the other stated goal was to not impact the tax rate any more than it's been impacted. So therefore, to an earlier comment I think Mr. Tetra made, the area it has to come from is expenses. Right?
Well, Mr. Flynn, just to keep on that track, we've knocked $200,000 off out of two budgets, right? Because
We
we're,
haven't voted yet, but
well, on the CIP stuff, on the capital, 200
Yeah,
to date.
and it's entirely within anybody's individual view as to whether they count the additional 450 towards that as well.
Yeah, but so at least we're down to 1.1 out of the 1.3, is that correct? Am
Yeah.
I doing the math correct?
If-
So I
if
just want to
that-
focus everybody's,
If you were to go towards that, that's correct.
Yeah.
That 200,000 would count, right?
okay.
Absolutely.
I think my only caveat is, it seems to me there has to be some thinking about would it all be on the expense side as, might be suggested, or should some of it be looked at on the revenue side, and, I just don't know. But-
Yeah, and Mr. Fleto, to that point, we didn't talk about revenue tonight. There's a couple areas of revenue that concern me. The first area would just be investment income. That should be as no surprise to anyone. I think that's a little bit high. And the second area, and quite candidly, I don't feel strongly one way or another on this, other than it's worthy of a look, is conveyance tax. Now, I did hear personally some information from our town clerk tonight in terms of our trending this year and where we finished out last year, that quite candidly makes me more comfortable with next year's number than I was when I walked in, meaning the 1.2. But I'm in no way, shape, or form a real estate expert, nor do I track this thing, so I'll be looking for some guidance from my counterparts. But I think Mr. Brockfeld and I, based on what we know of the investment and our work there, probably both believe that number's a little bit high.
I'd also add, if I may,
Please.
that we got a memo today in our email that supported what Mr. Lombardo talked about at his last presentation, which makes the rental income at Penfield look really extremely dicey, to the tune of, I think it was about over $100,000 if you added, Mr. DeWitt's nodding, I don't have the memo in front of me, but I remember there was a,
I think that's what it,
and I didn't really see, unless there's some way for them to get this thing built for July.
Which they're working on
I
right now.
understand, but I'm saying
Yeah.
but if we can't be convinced that that's either likely or probable. then
It's
I-
another stress point.
It's another stress
Yeah.
point, but it's right in black and white, it's right in front of us.
Yeah, that's a fair point.
And just to emphasize, Mr. Chair, I think the difficulty now is we need that information by next Thursday night when we vote. Getting it to us 2 weeks from now doesn't help.
That's correct.
Yep.
And we don't have another presentation, so theoretically by email sometime before that.
There was some emails that happened very late today that I will
Yeah, I can,
forward tomorrow.
with the board's indulgence, the building committee's had Rich and Jerry analyze their contingency, and they believe, at least the emails from the chair, Rich's analysis shows there is enough left in contingency to allow them to proceed on a premium, fast-paced schedule. And so I sense that that's their plan, even though they haven't voted on it. But that's just what the analysis said so far.
Yeah.
Mr. Tetra?
The risk of drawing any ire from the board, if they basically use their contingency to fast-pace this, and they end up running into some other issue that they still get done by July, but it costs them more money, and they look like they're going to be over budget, what's the process there? Can we go back and increase that resolution, or do they have to find money from somebody else? How do they, if
Well, it would probably
you
have to
can,
be a...
you can run over budget and not do stuff. What if you're running over budget, but you really need to do this
Well, I
stuff?
mean, there's a couple of approaches. I don't know if you can reopen a bond resolution. You certainly do a supplemental bond resolution. I know that I've requested Parks and Rec review, and Ellery's, Plotkin sent an email back. Could they use part of their rec revolving fund for a difference as another approach, as an option? That could be considered, but I suppose the supplemental bond resolution, like we did with Tomlinson, is certainly legal.
And Mr. Flato, to dovetail on what you just said, if they were to try to do that with the Park and Recs Fund, they've been told that before they go above $25,000, they would need to come back to this board for approval to do so. Right? So they're well aware of that in no uncertain terms.
I'd also actually like to add one thought that just came to my mind, and it's not because it's our business to tell them how to do the job, but we are giving sort of a direction from the board that we want it done early for our budget purposes. We certainly wouldn't want to spend, say, $250,000 of extra money to finish it soon so that we can make $100,000 in rental income.
Right.
And I think that actually sounds to me like a risk.
Knock on wood, it's about 90,000 that they need to finish.
I saw the
this.
memo, and I'm saying,
Yeah.
but Mr. Tetra brought up the point that what happens if they, their heart, well, you know what I'm saying.
It's a fair point. Any other questions, comments, or do we know where we're kind of heading here? Anybody else have anything to add?
I mean, I think for our board, I just want to, this has been a really, I think, productive series of budget, a lot of budget sessions, but, it covered a lot of territory and important issues, and appreciate it. I know everybody did it really conscientiously and thought it was a good group of sessions.
Yeah, I want to thank everybody as well. We were thrown some curveballs here. I think good curveballs. I think having the TFC come back in, Ms. Stenick, I think was a great idea. It certainly elongated the process, so thank you very much. No. But we did that. I think the Internal Service Fund discussions lengthened the process, so I appreciate your indulgence as we had to move around the agenda over the past several weeks to accommodate some of that. And I'd like to thank the department heads as well. And Mr. Hiller and Mrs. Gardner, and Deb, thank you for all your support through this, and Dr. Title and Mrs. McQuain and your team. We appreciate it for everything. So, Mr. Kiley?
Thank you, Mr. Chairman. Back to the Recreation Fund just for one moment.
Your
Mr.
favorite
Hiller,
topic.
Yeah, can we please get a reconciliation of where the fund stands as of February 28th, so we know what the balance is and what might be available?
Yeah,
Should we choose to go down that
I
road?
will. I caution that it's going to be a very, very favorable balance at that time, because I know they just put in a deposit of over $300,000, which are basically for all the spring programs, and so all the costs that are attributable to that. But I think what we could do is similar to what we're doing in some of these other things, is look at where they were February 28th this year, where they were February 28th last year, and give some comparisons on date, because you're going to see not a false figure, but a very high figure as a result of all these deposits that have come in for all their spring programs.
Right, so let me add to that. I think the way to look at it would be to look at what's in the account today, to look at what revenues they expect between now and June 30th, and to also look at what expenses they're going to have between now and June 30th, so that they can give us a projected balance on June 30th, because that's on or about the time that we would need the money, so we can gauge what should be there to see how much flexibility we have.
And I think it would also be helpful to the building committee to look at that if they feel they've got to draw upon that, because, and the building committee is meeting next Monday
Right.
evening.
Because, I mean, that's one of the purposes that we monitor that fund and we set that fund up, so
Sure.
that when we need something, we can potentially look at it for assistance, so, thank you.
Thank you, Mr. Kiley. Any other questions, comments, concerns? board
Mr.
members?
Flynn,
Mr. Walsh?
number one, I want to compliment the Board of Finance for moving up the capital improvements projects area up into the, earlier into the program into February. I think we've learned a lot through that. I think that Ms. Stenick's idea of referring this to TFC was a great idea, and actually, I think in the end will save the town a lot of money. Seeing that and how that worked in the short time we had to refer to them, I think that your board maybe should look at maybe having that referred out earlier.
Yeah.
Both from the Board of Ed side and the town side, so the TFC maybe can get it 60 days before that to really look at some of those items and pulling those together earlier to see, so that no one's rushed and everybody has the information, and it would make this process even a little smoother. So to the extent that maybe after the whole budget process is done, when you have some downtime, maybe spend a meeting or so to kind of come up with a schedule in the future for how you're going to be doing it, I think could even perfect that process even more. And, I think it would be easier to be handled by all the boards in the future.
Yeah, thank you, Mr. Walsh. One of the things that we instituted, I think, 3 years ago or so, was a budget subcommittee, and that budget subcommittee, at the end of the budget process, does a postmortem. And they take recommendations and commentary from around our board and your board, and they go about putting together their thoughts on how we can improve the process each and every year. In fact, the idea of moving the capital projects up earlier in this overall process was one of the initiatives of that subcommittee, as was something like this session, where it's more of a hash session, as well as continuing with the Saturday open forums. So I would think that will definitely be on the table for the budget subcommittee, and would encourage everybody to submit any recommendations they have for how we can do better. So thank you.
Mr. Chairman, you've left out one important thing that they did.
What's that?
Which was to establish the
Coffees.
schedule on the coffee and the donuts.
I'm going to give, well, but Mr. DeWitt did the implementation, so it's all about the implementation. Mr. Tetra.
Mr. Chair, kind of, Mr. Kiley's comments keyed off an idea. I know we don't have many, but are there any other reserve funds that we can sweep or get money from to help supplement this internal service fund?
And they're mostly small trust funds. I could ask the fiscal office just to see if there's any, but in all seriousness, if there are any discontinued operational funds. We do have, Paul tends to close out small projects if there's excess unspent monies from past years. So, we could have them take a look at that, and if there's a few $100,000 to look at, certainly that would help.
A few $100,000 would be a big help.
We carry a revenue line for discontinued funds, which you see in virtually every year's budget, and that's usually, when we pick up the scraps that are on the floor, frankly. on some stuff like that.
But if it's already in the revenue here, that won't help us.
It won't help
because-
us, no, and that's.
Is there
you know,
anything that
and-
would
and-
help
and
us?
the funds that, you know, they're not significant, but they're pretty well restricted, you know, as to where we can go on the things. They're listed in the audit, but
Thank you, Mr. Hill, I appreciate it, and appreciate your time and efforts. Any other questions, comments from anyone? Seeing none, can I have a motion? Motion by Mr. Bolito, seconded by Mr. Stone, all in favor?
Aye.
Opposed, abstentions, we are adjourned. Everyone, thank you.
Thank you.
So did I, but everyone wanted to go.
No,